everyone. Thanks for coming in today. It's great to see we had a really good turnout. And again, thank you to Wayne for organising today's sessions, which are specialising in non-bank, which is something that you guys probably are seeing more and more opportunities to utilise. So hopefully my presentation works. So just so I get a feel for who in the room doesn't know a lot about who we are and what we do, how many guys, if you put your hand up if you don't really have a good understanding of what we do? You all, so there's a few guys that, yeah. But I know some of you here have used us, so a lot of this you'll know, inside out. But for those of you guys that haven't used us before, I'll go into a little bit more detail about what sort of product offering we have for you. So DBR, we are a non-bank security lender, and we are the people you come to when the bank won't help you and your client has some cash or some equity and an opportunity. So through the session today, we're just going to be covering off a little bit of background on how much deals we've written over the last 9.5 years. Next year will be 10 years old, so just to give you an insight as to the levels and volumes of business that have been written and over the last 12 months. So you can see that there's a lot of opportunity in our sector. Then we'll be going through how you find a DBR deal, what is a DBR deal, how you qualify a client and how you convert it. And we'll be taking a quick look at our marketing campaign that we're running for 2018, which is pretty exciting to celebrate our 10 years. And then I've got some more of the interesting case studies. We do a lot of the slightly strange and unusual and weird stories. So I've picked out a few of them that I've done over the last 12 months that I think will highlight some of the reasons we've done those deals and what sort of opportunities there are for you guys to keep an eye out for in the market. So this is who we are. Only a small team. Henry and Jeff are down the back, and Henry speaks Cantonese and Mandarin, so very helpful for our Chinese clients. And Jeff, Henry and Nick are based in our Takapuna office, and then myself, Sian and Janine are based in our East Auckland office, so we're sort of across the Auckland. The Daryl and Brett are the D and the B in DBR, and R is Brett's brother Ross, so only small. Now this photo was taken in 2016 when we all went on Outward Bound for a week. Just closed the office and focused on for the team building. So pretty tight-knit unit, and that's what you need when you need quick, simple offers. You need a small team that can react, and that's what we do. So that's who we are. So what we do, because we're a security lender, if you've got a client and they've got cash or equity in a property, minimum 28%, then you can potentially come to us. So we lend to a maximum of 75% on standard residential property in Auckland. Now, it's quite a logical equation. The more unique your security property is, the less people that would be interested in buying it, the lower we lend on it. So if it's a stock standard house in Auckland, 75%, not a problem. In this market, we've been putting more out at 70, but for the right deal, we will stretch it that little bit higher. We'll lend on land, plaster houses, half-built constructions. We do constructions from scratch. So all sorts of securities, but the harder it is, the less we will lend on that to mitigate that risk. We're short-term, so most of our loan terms are 6, 9 or 12 months. So you're really essentially buying your client time by coming to us, and that might be time to tidy something up, to get it back to a first tier, time to sell off an asset, might be the asset that we're lending on, or another asset, time to bring more money in from offshore, all sorts of various scenarios that come to us where people just need that little bit of extra time to make an opportunity work. So interest rates, they do fluctuate. We've got 70 million of funds to lend, and a big chunk of that is the ASB. It's a big line of credit. So we try and lend that out as much as we can. It goes in and out sort of 2 to 3 times a year, just keeps rolling in and out. The more money we have to lend, the better our rates become, because we pay for that line of credit, whether the money is lent or not. So if we've got 30 million to lend, you're going to be hearing lots from us, cheap rates, we'll do the harder deals. when we get less money to lend, you hear less from us, and you'll see that the pricing becomes less competitive, and we'll get pickier about where that money goes. So it's just the natural thing for our second tier lenders. They're always managing their money because it's not infinite like the banks sort of appear to be. So interest rates at the moment, they've been ranging from 8.95 through to 11.95. So the shorter the loan term, the lower the rate, and the less risk profile, the lower the rate. So if you want 12 months for somebody who's got multiple adverse credits and they've relocated a house on a site and it's, doesn't have CCC yet, you're going to be paying a higher interest rate for that. Often in those scenarios, the rate is the last thing that your client's got the concern with. They'll be grabbing that offer because it's saving their bacon and you're the only one that's being able to give them that opportunity. So often what we do, although it's our natural thing to focus on rate, so often it's the last thing that you really need to be considering in the whole process. So fee-wise, we charge 2.08% and we collect as a standard 1% for you guys. No clawback on that because we said short term. You can discount that if you choose to. We try and encourage you to collect the 1%. You can charge more as well if it's a small loan and you've put a lot of time into it. You might charge a little bit more on that, but we get a mandate if it's more than the 1%. So short term, those are the rates, those are the fees. That's basically what we do. Okay, so the numbers. We've been going 9.5 years, so we're going to be celebrating. You'll see lots of things happening with us next year. So over that time frame, we've written 1,008 deals. So that's not necessarily 1,008 different clients because we do a lot of repeat clients, and they're some of my favourite because when you're second tier and you do deals for people that come back, it means you've done a good job. And that's going to be your developers, your property traders. You don't want your mortgagee clients coming back because obviously the solution didn't work and we don't go there again. So the total dollar volume, 531 million. So you work out the commissions that we paid out over that time to the mortgage broker network, and that's significant brokerage there. Now, we're really proud of the fact that we've only had 8 mortgagee sales. So, 1,000 clients went well. Some of those may have gone on and, had challenges after the fact, but we haven't had to put them in a mortgagee sale situation. 3 of those mortgagee sales were mine, so I know them intimately. And typically, when we have a scenario when there's a mortgagee sale, it's that they don't communicate. If they're vanished or they've gone overseas, there's very little you can do to try and work those people through. The reason why we've had so few is because we meet the client up front initially. We have the conversation about what is to happen. We monitor it with you, and then if what hasn't happened, if the plan didn't work, then we go, okay, what is the plan going forward? Is there still a solution? If there is a solution, we'll work to that. If there isn't, that's when we start to market the property. So, if you talk to any of the competitors who've been going that long in the second tier business, their mortgagee stats would be significantly higher. So that's sort of an intangible. We might not always be the cheapest, but it's how you treat the client and how we treat you. That is a big factor when you're placing your client's trust in a lender. So over the last 12 months, we've written 109 deals, and that's 89.9 million in dollar volume. So there's a lot of opportunities. If you're not writing second tier business with us or someone else, then you are missing. There are a lot of opportunities, and it's just being open to what you can actually do. So often I catch up with a broker and they go, oh damn, if only I'd realised that you do non-resonance and this and that. I just lost a deal. So it's keeping it top of mind what is actually available. Okay. So what is a DBR deal? It's the easiest calculation you'll ever do, and it's obvious. Is the benefit to the client more than the cost of the finance? So you just crunch those numbers. Are they going to lose their home in a forced sale situation? And it's not always necessarily monetary. They might have a connection to the home. They don't want to lose it. It's their folks' home and they've lived in it for 30 years, that sort of thing. So are they going to lose money in a forced sale situation? Or are they going to miss an opportunity where they could potentially make a couple of $100,000 in profit? or if they can't get a capital injection into their business, are they going to lose their business? Are they going to get adverse credits which are going to affect their business? That sort of thing. Are they going to lose a deposit? We see it a lot lately. Clients have gone unconditional. In Auckland, a 10% deposit, you're going to lose 100 grand, you know, because something hasn't come together. It's the easiest math. You work out our cost versus the difference, and then go for it. And that's the best way to present it to your client, to get them across the line. So if you think you've come across an opportunity and can't help, and you've gone through that calculation and the benefit outweighs the cost, then it's time to start thinking second tier. So why would you come to somebody like DBR versus other people in the market? And the market's always changing, and there's new people coming in, and you know, we all have different appetites for various things. One of the key reasons in more recent times why you would use DBR is speed. So we're hands down the quickest second tier in the market. And if your client's on settlement notice and they need to settle in 3 days, and don't bother going to somebody who might even be 1% cheaper on fees, 2% cheaper on interest rate, you're not going to get it done. So they're going to lose the deposit, lose the opportunity to purchase that property. So I wouldn't even bother talking to anybody else. I'll just come straight to us and say, this is the scenario, can we get it done? And 9 times out of 10, they'll be saying yes. So example of that, I had a $3 million deal settle Monday last week. I got it on the Wednesday, and we got our valuer out there. And it wasn't a straightforward deal. So, you know, that sort of scenario, we can make these deals happen, whereas you'd lose it through any other channel. So speed is a really big reason why you'd come to us. Experience, so, you know, with Jeff and Henry and myself, we know how to make your deal work. So it might be on the initial impressions it doesn't quite fit, but we might be able to caveat something else or have a discussion about, if you just did this, then it might work. Classic example of that, we had a deal about a year ago now, but I went through the numbers and I said to the mortgage broker, and this client had been approaching multiple mortgage brokers, I said, it doesn't work, this guy's going to have to put $1 million in, you know, to get these numbers to work. So she went away and just asked the question. This guy had $1 million that he put into it and we did the deal. So sometimes you think, you know, it just doesn't work. Put it to the client, you never know, they might be able to make that work. So it's just looking sort of laterally at it. So it's the experience of making these deals work. And often, if it's a little bit complicated and you guys aren't confident, if it's a construction or something, that's where you just go, hey Laura, I've got this deal, what do you think? And in the right scenario, I'll go out and meet your client beforehand. Before I've even issued an offer, I'll have a look at what they've done, we'll have a look at the council files, we'll work out the numbers and go, okay, best way to present this to the directors is like this, and you know, I package it essentially for you. So if you're struggling with that, that's where you can use our expertise to pull your deals together as well. So a lot of experience. We're simple, so our offers are really transparent. We have very minimal conditions within those offers, and it's very rare that we'll add a condition on after that offer has gone out. So we try not to, you know, some of our competitors, they issue an offer, it hasn't gone through a full credit process, they issue the offer, if it's accepted then it goes up to the board who then say yay or nay. So you've told this client it's all accepted, you know, they're thinking that the deal's done, and then the board goes, well no, we don't like that aspect to it, you need to get X, Y, Z, and you know, that changes the whole deal and, you know, puts mud on your face a little bit because the client thought that everything was done and dusted. And I've seen that a lot this year, where clients have gone all the way through a process, they get to documentation even, and something major happens and the deal falls over. So it's highly unlikely that that would happen if you come to us. So quick, simple, transparent, and a lot of experience is why you would come to us. We're not always the cheapest, but you know, we run a lot of business and there's a reason for that. So how do you find a DBR deal? So it's just being in that mindset of what opportunities are available to you. So the biggest place really to start is your very own database. You know, send them an email which says, hey, are you sitting on a section that's potentially subdivisible? They might have lived there for 20 years and they know, you know, the unitary plan, they're hearing all this stuff and they know they've got land on the back, but you know, they're retired, what are they going to do? They're going to have to sell it as a development opportunity. Or potentially if they know that there's an opportunity to use someone like us, where you don't need income for servicing, as long as you've got enough equity, well then they might go, oh, you know, that's great. I didn't realise that you had that access to that. I'm sitting on something like this. If you've got a lot of labourers and tradespeople on your database, you know, electricians and plumbers and that sort of thing, they're in the trades, there's a lot of builds going on. Let them know that if they've got a build project that they're entertaining and they've got some equity or cash to go into that, they've gone to the bank, they've run the numbers and the bank said no, or potentially that might work for something that you can consider. And you may not even appreciate that some of your clients might be in financial distress on some level. They might be business owners and it looks like it's going all good, but they desperately need some capital to make something happen. They know their financials don't stack. They're not even aware that there's an opportunity that you can help them with. So just let your database know, you know, an email a month or something a little bit special about, you know, what's outside of first year. They will know what the banks can do. They can go online and Google it. They don't know about what we do. So it's just making them aware that there's opportunities for them as well. So your database will be the first place to start. Then I talk to your real estate agents. Now, real estate agents, as you know, they come and go, and if you can align yourself with a good one that's been around a while, you will get business. But it's just finding those, you know, those key ones that you're not going to invest all that energy in, and then they disappear. So your real estate agents, the key scenario is about them. The real estate agent is going to lose their commission because that's what they care about. They care about the commission. You might be their friend, that's great, but they want to make the commission. So if they're going to lose their commission on a deal because their client can't settle and you then save that commission for them, you know, they're going to remember you for the next time and the next time and the next time. And it might not be a difficult second tier deal on the next one. It might be a nice, clean, straightforward first time buyer, that sort of thing. Example of that, I had a deal where a real estate agent had sold a large block of land in Dairy Flat. She had then, the purchaser had got delayed settlement terms on it, and he had used all his own funds to subdivide it into another 8 lots, and she had sold the other 8 lots. So it came through to settlement, and she was thinking it was all going to go through. There was a problem with the finance, so she's potentially going to lose the commission on the head title and the other 8 lots. So you're talking a lot of money. So she was stressing out, bringing the clients to the broker's house at 6 o'clock that night. It was all urgent, urgent, urgent. Long story short, we got the deal done. Agent super happy, tight relationship from then on with that mortgage broker for future business. So if you let them know if there's any scenario and that client can't settle, call you. There might be an opportunity. It's just making them aware that, you know, you can do that stuff outside the box. So real estate agents, lawyers is another thing. Often lawyers get involved at the point where it's getting sold up. So the client's at the point where they've gone in to see the lawyer's gone, oh my goodness, property lawyer notice has been issued and the sale's in a couple of weeks' time. We don't do as much of that in this market because obviously it hasn't, but it's cyclical, so you know, you see it coming through again potentially. We see a little bit of it, but you know, the lawyers are the ones that can then refer that business to you to see if there's an opportunity to tidy it all up, give them time to sell it themselves, or if there is a solution, you know, pay the tax man, tidy up whatever so that you can get them back to first tier or a stepping stone like Resimac or Livy or Co-op, you know, then we can work through that process. Deceased estates, you often get scenarios where, you know, somebody's died, it's multiple siblings, between them it looks a bit of a mess, they need time to tidy it up, work out who's doing what, you know, that's when we can come in and tidy it all up so when you take it to the bank it looks like a sweet deal. So that's your database, real estate agents, your lawyers, and I didn't talk about accountants, did I? No. So accountants, obviously that's obvious. We don't need to see financials. Sometimes we'll ask for it in the right scenario or some sort of thing to support what you're saying, but in general we don't need financials. So your accountant's got a client, they're committed to a purchase, they're screaming at the accountant for the financials, the accountant can't get it done in time, or the financials don't actually show what you need to make it work. That's when the accountant can refer it to you and go, this is the client, can you make contact with them, this is what they've committed to or trying to achieve, and potentially we can make that work. Often we capitalise the interest within the lending if there's capacity, so you don't actually have to worry about your client meeting servicing. And in some scenarios, we will cap a portion and the client pay a portion, if they can, if that's what we choose to do. So we're always trying to work out what's going to be best for the client. We get a lot of quite well-heeled, wealthy clients as well, so if they know that they can service the interest, we don't drill into that. It's a conversation you have with that client. And then obviously if they don't make the interest payments, that's when we're on top of them straight away. So we don't drill into all that extra information. So that's the sort of things you should be discussing with your network about what opportunities are available and what they could send to you that potentially is causing them problems. You solve their problems and they'll remember you. So how do I qualify my client? That's a real major one, and we all waste a lot of time doing stuff where it goes nowhere. And you know, you've been under a lot of stress, and then the client comes up and says, "Oh, Brandon's come to the party and she's giving me the money." Like, oh, that's great for the client, you know, good solution. Damn it, you know, we put all that work into it. So to qualify the client, firstly, I would ask them, as I'm sure you all do, are you dealing with any other mortgage brokers? Are you still dealing with the bank? And that's the key thing. If they're still dealing with the bank, well, you can get in there and have a go, but before you come to me, make sure the bank's not an option, because it's just a waste of time from our perspective if the bank then comes up and says, we'll do it. And if your client's under pressure and you've had it at the bank for 3 weeks, and then they're screaming at you and you need a backup, we can turn it around within 24 hours. So you don't need to get it to me the week before as the backup. You know, you might just want to run it past me and go, does this sound like something you can do? Say, yeah, indicatively that sounds good. Leave it, you know, until you know the bank's not an option from our perspective, and that will save you time as well. Try and make sure you've identified all parties to the loan. So often we get an application like, yeah, this looks easy, blah, blah, blah. We go onto RPZ and there's somebody else on the title, and we'll go back and go, who is this person? I didn't know there was somebody else there, and you find out it was a brother or mum who's 90 years old and they're, you know, trying to do something with her property that she's not aware of. So make sure you know who the decision makers are and who's involved in it, so that when you put all that work into it, it's not going to be tip over that somebody's not into what's being proposed. If they're using another mortgage broker, or you think you're being shopped, get them to sign a mandate. And that can sometimes feel quite hard to do, you know, when you're trying to get money out of somebody up front. But if they're shopping around, you're probably not going to get that deal anyhow, or you've got to be prepared that you're going to do a lot of work and it's 50-50 as to whether you're going to get it. So for us, what we do, we take the first application from the first mortgage broker and we issue one offer. So if your client's under pressure and they've run 5 mortgage brokers and they're all scrabbling around, and we see this in our industry, if you're the first one with the application, then we issue one offer and we work hard with you to close it, because you know then that client, the next broker that's spoken to me, I've said, no, we've already issued an offer, is going to every other lender trying to get a, you know, use our offer to get a better offer. So we put deadlines on it and we push that client to get that deal closed. So using a mandate, I think, is something that you should just have in your toolkit all the time. Qualifiers, we've got the mandate, who's parties, and costs. So that's a key thing. So often you can say to somebody, look, there's an opportunity here, it's going to cost you 3.08%, and they go, oh yeah, when you actually put the dollar figure there, and they see what that means in dollar terms, they can go, oh, hang on, I didn't actually, I didn't do the maths and realise that that's what it's going to cost. So make it clear to them, this is the cost of not doing it, this is the cost in dollar terms, is this something that you want to consider? And often by doing that, that will lead to the conversation, well, I'll just ring mum and dad and just see if, you know, if they can lend me some money for a short period and that sort of thing. And that's great if you know it from that point, it'll save you running around and wasting a lot of time. So qualify as much as you can before you have to spend your own energies on it. What info do I need? So we are much, much easier than the banks. We need your application form, we need your diary note. So your diary note needs to say, where is the property? Because the property is obviously key. We're pretty Auckland focused at the moment, so if it's outside of Auckland, could prove challenging. We do lend in Tauranga, Queenstown, Wellington, a bit in Christchurch, but we're not really in the regions unless it's an exceptional story and it's something, you know, that So where's the property? How much do you need? The next key thing. How long do you need it for? And what is the exit plan? So because we're short term, you've always got to have a plan. You need plan A and plan B in case plan A doesn't come into effect. We do extend clients' loan terms. So say they took 12 months, plan hasn't quite gone to plan. Say it was a build, it's not quite finished, CCC's not out, they don't pay for sale. We do extend the loan term, but the fees are payable again, so the client needs to be aware of that. They're trying to get it in a short term, it doesn't work, they're going to pay fees again, which will cost more than taking the longer term at the beginning and paying the higher interest rate. And there's no guarantee that we will roll. So we'll be looking at what's happened in that 12-month time frame. Did you miss payments? Did you, not get through the project as well as you should have? All those sorts of scenarios. And we'll be working out that, whether it's to your benefit, your client's benefit, to continue to roll it. The great thing for you guys is you get commission again. So it's like a new loan. If the client had given us the money back at that time, then we can lend it out to somebody else, charge the fee, get the broker commission. Now, not all brokers will charge 1% on a roll. Some will. Sometimes there's a bit involved in a rollover. Usually there's not a lot involved, and you get another commission, which is great. So it's just something to be aware of. In your planning process, what is a realistic time frames you need to know. So where is it? How much do you need? How long do you need it for? And what is the exit? Now, if there's no exit, some of our competitors will do a loan where they think that, this is actually going to go anywhere. We won't. So we have a model tree. We go through the model tree. If it's something that's a little bit, we look at how long somebody's been in the house, what their debt levels over that period of time have increased. Classic scenario, they bought it for 80 grand in the 80s, they now owe 600 on it, they're facing mortgagee, it was mum's property, and it's in the family, those ones really, really hard. We'd probably rather not do that unless it's a very low LVR, because you're going to come into issues with that. And that's the other thing from your perspective. If it's a really tough story, there's a lot of energy that goes into working those clients out the other side, so you have to sort of moderate, is it something you want to take on from the beginning, knowing the level of work that goes through that process. The great thing with us, and with myself and Jeff and Henry, is we monitor all our own arrears and we do our own mortgage sales. So, we know where it can get time consuming and stressful. You can dream about these clients at night. So think through that scenario before you take on some of those harder clients, and have a chat with us, and we'll be able to give you a bit of guidance as to whether we think we can get these people out the other side. And sometimes that's having a meeting. I meet this person, we're always on their best behaviour when they meet us for the first time, but you can get a gut feel for if somebody's slightly, or they're not telling you, they're telling you what you want to hear, but they're not actually committed to the process. So by having that meeting, we can work all that out at the beginning. So really simple what you need, send that through to us, and then we can turn that around within 24 hours, often less if it's a straightforward deal. We like deals that make sense. Some of these ones I get, I'm going, how does that, how do those numbers work, or how have they done that? So the easy deals, you get quick responses because it just makes sense, and we can whip those deals out the door. And then obviously once you've gone through that process, the client understands the benefits and the costs, you've qualified them, Nana's not going to come up with cash, you've got your information, send it through, give us a call, and we'll get that offer to you. Now that's the most important thing in the whole process. So the best second-tier mortgage broker writers believe in what they're selling. I've been doing this a long time, and I know a lot of brokers, particularly from the ones that have been around for a long time, they're very first tier, and they will come to us as a last resort, which is fair enough. But then when they present it to their client, they're almost apologising for the fact that this is what they're presenting. If you go in with that sort of attitude, you won't close the deal, unless the client's completely desperate. If you go in and you go, look, bank's not an option. This is a solution, this is what you're going to save, this is what it's going to cost, do you want to do it? I think it's a good option for you. You're way more likely to close that deal than something that you're not believing in yourself. When the numbers make sense and the benefit to the client, it's really easy to sell. It sells itself, basically. So So make sure you believe in what you're telling them. So this is an example of a mandate. You've probably all got something similar in your toolkit, but if you need a copy of that, just let us know. And it basically says, if I get you an offer on these terms, you've agreed to, you will pay me regardless of whether you accept that offer. So whether you can get the money out of them, but it will, it will qualify them whether they're actually serious about using you or not. Okay, so over the last 2 years, we've been platinum sponsors for some of the biggest mortgage writing groups in the market. And as I'm sure you're all aware, that's a lot of money that gets channeled through those networks that then filter down to you. But what we've decided to do, because we're 10 years next year, it's a bit of a big thing for us, we've decided to give that money to you guys. So between November this year and November 2018, we're going to give away $50,000 in cash. And we're just going to be bronze sort of sponsors through those channels rather than platinum. First prize for the top volume writer in that time frame is going to be $25,000 cash, which we'll give away at a big, hoo-ha event. Second prize is 10 grand cash. Third prize, 5 grand cash. And then any brokers that have done business with us, a deal within that time frame, will go into the draw for 2 spot prizes of 5,000 cash. So it's a lot of money that we're going to be directing for you guys. And each month, you'll see you've probably seen all the texts and things coming through. If you haven't, let us know, because you're obviously not on a list somewhere where you should be. But you'll see the leaderboard from November. You can see who's number 1 up to like number 10. And that's going to be changing constantly. So for those guys that are, near the top, it's going to be quite exciting to see as they chop and change. Now the interesting thing is, with what we do, I can have a broker who has never done a second tier deal for 8 years, and then all of a sudden they get 4 in a row. And I don't know what that is, whether it's just their mindset, that they're more open to it, and they're thinking, oh wow, this was easier than I ever imagined. So you just never know. You get 1 big deal, 2 big deals, and you're playing in those top numbers again. So the opportunities are there. So to be in that, you've got to register. So hopefully you've all received the email that has the link to register. It only takes a minute, and there's some basic questions on there. You rate us 1 out of 5 on a few different things. And once you're registered, that means that you can potentially win. So some of the brokers that have already registered came back to us. One of the questions is, what would you do with 25 grand cash? This is some of the stuff that's been coming back. Towards a 62 Corvette, that was particularly nice. Fly first class to South Africa. Hire an advisor, move to bigger office. And that was quite a common thing. People were going to invest it back into the business. Would it be wrong to say pay off my mortgage? It's not a bad one. Watch the ABs defend the cup in Japan. Spend with you, ha ha ha. There was a bit of that as well. I'll take you to lunch, and it's like, yep, rides, all good. So can anyone remember from what we've discussed over the last short period, how many loans we've written in the last 9.5 years?
2008. Of 1,000.
Oh. Make sure you're listening. So that's going to be a campaign that you're going to see ongoing that you can all be a part of. Okay, so I've just got a few scenarios to go through. So if you've got any questions about them, or you want to chuck some other questions about anything, just let me know. So this bridging loan, it was particularly interesting. It's a nice big one, and I love the big ones because you spend as much time on these as you do on the little ones, and you get paid a lot more. So 30 grand commission went to that mortgage broker. Now, the interesting thing about this one was the broker came to me with the application and he said, Laura, I'm going into hospital for 4 days and you will not be able to communicate with me. Can you make this deal happen? Like, okay. So I looked through it. These clients, they bought a property in Taupaki, which was a large piece of land in Westgate, just behind the shops there. Still lifestyle, there's a big showroom behind there, so there's a lot of development, and they're the next bit along from there. So for them it had an awful lot of potential. They wanted to do it in stages. So stage 1 was presented to us as chop off the plaster house, which was right up near the road, and 2 lots that came off the road. And once they sold that, it would clear our debt, and then they'd go into stage 2, stage 3 of the subdivision down the track. So I went through all the information, thought, yeah, I think this deal's going to work. So I spent quite a bit of time, because you've got geotech reports and you've got council reports and resource consent applications, a lot of information to work through. So trying to read through all of that so that, you know, I understand that this actually stage 1 and stage 2 can potentially work. And I put it up to the directors, and they sort of knew what I was working on. And the boss came back to me, he goes, oh, Laura, he says, I know you spent quite a bit of time on this, but I'm really sorry, but we're only going to give you an offer for 3 million, and they'd asked for 3.5. So I said, oh, okay, you know, well, you never know, we've done all the work, let's put the offer out there. Meanwhile, the broker's, you know, oblivious to all what's been going on. And the clients accepted it, so I was like, yeah. So I go out there with the directors. On a bigger loan, the directors come with us. If it's a little one, then I just meet the client. We walk around the property, the client tells us everything that, you know, we needed to hear. Got the deal done, and I was trying to get hold of the broker last minute, once it was all going through, and he's like, Laura, yeah, that's great. So, you know, he was rapt that that got done. And he'd been other places. He'd started off with the client saying, yeah, we'll be able to get this loan to value ratio. He'd gone through a process of, you know, coming down the chain. Nobody wanted to take it on. Didn't have resource consent at that stage. They said it was going to be about 2 weeks away. It took 5 months from settlement for them to get it. But the great thing about this one is they're just repaid. Once they got resource consent, they were able to go to a solution that was cheaper than us. So that's a great result. We get the money back, we can lend it again to somebody else who needs it. Okay, so this one is interesting because of the time process. So this particular broker caught up with the client on a Sunday afternoon. She sent me the application at 4 o'clock on Monday. I went, oh, this deal's easy, because basically he wanted the land value. He bought this section out in Maraetai, and he built a massive 380 square metre home, had it on the market, didn't have CCC yet, and needed to settle. So I issued the offer at 9 o'clock on Tuesday. They come back straight away, yep, we want to do it. I'll meet you at midday on Tuesday. I go out there, they sign the offer, they make the partial payment of our fee up front, because we get some money initially up front from them. I instruct the lawyers about 1 o'clock. The lawyer gets in touch with the client's lawyer, and then we find out that the settlement notice is expiring on Wednesday. So it's settlement on Tuesday, it expires on the Wednesday. Now, he had to settle the land, so potentially, if he didn't settle, he's going to lose the house or have a lot of issues, you know, trying to work through that not happening. So they didn't tell me at the meeting that the settlement notice had expired, so I'm like, oh, that's really interesting. So we're all then full steam ahead. We settled on the Wednesday. So, you know, the others, it just doesn't happen that quick. So that was a good result. It's still on the market. He's got CCC now, but, you know, he might need to drop his price over the next period. So that one's still with us. Equity release loan. So this is a nice one. Chap in his, well, I think he was in his early 70s. Now, he had had a matrimonial about 30 years ago, and at the time, if he'd paid his wife out, he would have been paying her out a fraction of what he had to pay her now. So they had finally come to something in writing about what it would be to pay her out, and the reason I think they brought it to a head was because he wanted to sell it without her involved in the process, and then he was going to move down to the Coromandel. So he just wanted a simple, quick offer. He has no income, so the bank won't do it, doesn't make the servicing. So we just gave him a nice little loan, capitalised the interest. He got rid of the ex-wife and put the house on the market and paid us back. So little salute, you know, scenarios like that, yeah.
Just give us a, well, but give us an example of what sort of interest rates these particular examples might be paying.
Yeah, I don't actually have it on here, but they do fluctuate. So something like that is 7 months, because, I don't know, we usually do 6, but for some reason they must have said they wanted an extra month. Something like that, you'd probably be looking at in the high 8s, early 9s. Now the great thing with us, and this is something to watch out with your competitors, is there's no penalty for early repayment. So we like the money to come back. You've had your fee, we've had our fee, we can re-lend it. Whereas some of our competitors might have 2-3 months, early repayment penalties that you might not have picked up on in the initial assessment process. Your client sells their property and they go, hang on, that wasn't pointed out to me. And although it's in the loan documents, you know who they're going to blame? You guys. So with our scenario, although he's being charged interest rates, that are higher than the bank, if you're only talking about 3 or 4 months on a normal sale process, you're not talking a lot of difference. It's not a huge amount of cost. The biggest hurdle is the upfront fee, but that's just a part of making the deal work. And the other thing I use all the time is, hey, if this was a real estate agent, you're paying them 3% to do what? Introduce us? These guys are lending you money where nobody else will. This is cheap. Try that one. Construction, so we do a lot of construction and that does fluctuate. It's taken some of these builders a little bit longer than they planned. Council and sales slowed down a little bit. But this particular client, this was their 3rd project with us. So I love these ones. We get to know them. Life gets simpler for everybody because we have less information. And this one they've since repaid, so they sold it. I think that the first one they did with us, they made really good profit. The second one took a bit longer. We had to roll it for them again, so they pay a fee again, but they got a sale and out the other side. So when we know a client better, the interest rate, will push to sharpen the pencil a wee bit. With construction, it's drawn down progressively in most scenarios. If your client's got a lot of cash, or they bought the land for cash, they want $500 up front to go away and build to their heart's content, and then come back to us at the end of it for the difference. So that sort of thing we can work. So it depends what your client is actually trying to achieve. Typically though, they'll put in all their money up front on the land and then we'll progressively advance the build costs. So what that means on day one, the interest is only being charged on a much smaller balance because all the money's gone in, and then they only get charged interest as those funds are drawn progressively through the term of the loan. So when you're doing your interest calculations of what it's going to cost them, you can work out a rough assessment based on a time plan, as to what those actual interest costs are going to be. Debt consolidation. So this was an older couple. He has a business, and the financials, they weren't looking too bad, but they weren't quite what they needed for the bank. And he needed to pay some tax debt, and they wanted to do some minor renovations. So for us, it's a small loan, but the LVR takes care of us. We're right now at expiry. These guys have just expired. I've been working with the mortgage broker because she just got the financials, and she's saying, look, I'm going to give it a crack. I think even though we're right on the cusp, I think I can get it through a bank with these financials. If she doesn't, that's fine. We will extend the loan because we're so low LVR. We'll just go, what's the plan? What have they done in that 6-month period? Yep, we'll give them another loan term. They'll have their 2018 financials, within the next time period, and hopefully they can refinance. So there's a pretty clear exit there.
What percentage do you charge for a rollover?
So it's the same.
So 2.08 again.
2.08, yeah, plus your 1% if you choose to charge that. The other thing in the initial settlement, which I didn't mention, so we've got that big giant campaign, lots of cash, but for you individually, we've had a campaign that we've been doing for about 5 years now, so it's almost a given, called Big Bucks. So for every 100,000 of lending that you write, you get another $100 cash outside of the terms of the offer. So it's capped at $2.5 million, but you write a $2.5 million deal. Once the deal's settled, I come to you with $2.5 grand cash. So that's, the client, it's just a promotion. So the 2.08%, if you really needed that to cover, somebody's legal costs or evaluation or whatever, you've got that little bit extra up your sleeve. But otherwise, it's just extra, which is great. First home buyer. Now, I don't get a lot of these, but there's more opportunity in the market for good people. The banks need border income evidence. So this lady, she had a good job. Her parents lived in Switzerland, and they gave her a large lump of cash plus her own savings to the deposit, 30% deposit. And she needed to get borders in the house and get history before the bank would refinance it. So the broker had done all the homework. She knew within as much as you can with the banks that there's an exit if she could show this income. And she was only with us about 3 months. So gifted deposit, banks hate that. Order income, you need history. There's all those sorts of scenarios where you start to think, if I could package it this way, this could work. It's just knowing what's available, how to be a little bit creative outside of the box. So that was a great result for her. Equity release. So this is an interesting one. I did a loan for a builder through a mortgage broker. Mortgage broker and a builder were in JV partnership together. And we did some builds for them out in Bottle Downs, and it all went really well. And the builder rang me about, 9 months later and said, I've got this client and I've built his house and he owes me money and I need it urgently because I've got things to, to pay for. Can you help this guy? So I was like, oh, okay. And it was in the same area, so, we knew the builder that had built it, so we knew the quality of what he'd done. It was basically finished, didn't have CCC, and the chap was self-employed again, so I don't even ask the question if his financials stacked up, but they probably didn't. So we refinanced the existing lender on it, we took out the extra money and we paid it to the builder. Obviously the client's all kosher with that. So the builder, who was a repeat client, was all happy, he got paid. The client was able to do that, and it's, they're all friends in that community. You don't want to let your friends down who have built, your house for you and given you a good deal on it and the rest of it. So he was just happy to get it done, and he's now since refinanced. So just needed time and CCC to then get back to a first-year solution. So I think when you've got ex-clients who have done complicated projects referring to us, it's a really good indication of what we offer. It's very rare that we do direct business. It's a tiny percentage of what we do. 98% of it comes through you guys. Another key thing to be considering when you're thinking where you're going to put that deal is if that client comes back to us, like that builder that did 3 scenarios, so often I've created a relationship because I've spoken to them more than you guys have over the last 12 months. They'll come back to me and they go, oh Laura, I'm thinking of doing another build. Great. Do you think this is going to work? Yeah, absolutely. I'll just let Anita know that we've had this conversation and she's going to get in touch with you and gather the information that we need. Do I have to use the mortgage broker again? Yeah, absolutely. They had so much value that, we do the whole sales pitch for you guys as well. Whereas our competitors, we know you introduce the client talks to them, it's no longer your client. So we will actively include you in that again. And I've had scenarios where I have one client, she's never met her mortgage broker, and I've done 4 loans for her. And the broker's been paid every time. So, yeah, so it can take a lot of that stress away from you as well. Investment purchase plaster. So this is a scenario you'll see a lot in Auckland. There are a lot of plaster homes, and they can be terrible for some people and a fantastic opportunity for others. So this one, you've got multiple issues with it as a non-resident. Well, we can lend to non-residents. We can have documents signed offshore if necessary, so that can, in some scenarios, be the key to making the deal work. And it's a plaster home with no cavity. Now, when we're looking at something like that, we're looking at land value predominantly and a nominal amount for the improvement, depending on what your scenario is. If you want to bowl it and fully repay it, obviously we look at that as a development project. But if you just want to buy it as is and do whatever, bring money from somewhere, sell something else, then we can lend on it as long as we feel that we're not overexposed on the land and a small amount for the improvement. So every scenario is different, but if you've got somebody with a plaster home that needs to do something, then, second tier could be an opportunity to make that work for them.
Excuse me, what was the exit of this one?
This one, I can't remember. It's repaid, so he had an exit.
It says they repay from overseas funds.
Oh, yes, down there. This happens a lot. So we don't drill into where that money is coming from. So we don't need to see their overseas financials to see that they've got a business. And we don't, I know it's probably not PC, but we don't treat every sort of client profile the same. Our Chinese clients, they typically have money offshore. They can bring money across, so we don't drill into that as much as possibly some of the other ethnicities. If they tell us something, you know, you've got a South Auckland mortgagee rescue, we might ask more questions about if there's money coming from somewhere, we need to actually substantiate where that money's coming from. So every scenario will have its own nuances that we'll have to look at, how financially savvy those people appear to be. But if they've said they've got money coming from somewhere and they can service the interest, you know, we don't drill into how supported that is by financials and offshore business accounts and all that sort of thing. So this happens a lot for us. They just get money from somewhere.
So regarding this one as a pastor, do you really care whether they are leaking house or not?
Every scenario will be different depending on what the client's plan is. So we have been on plaster homes where there's a cavity and there's no evidence of leakiness. We may reduce the LVR, so we might not go 75% on that, we might be 60 or 66%. If they're intending to buy it, like I've had clients who have bought a complete leaker, but they intend to demolish it and use the foundation to build again. So, you know, that's quite a different scenario. We don't care that it's fallen down. So it depends on what your client's trying to achieve. And if you know that it's about the exit, so if it's going to be a really hard one for the bank to take out and that is your exit plan, well, we might have to work it out that, okay, that's the plan. If the bank won't take it out, worst case the client knows they've got to sell it themselves if the plan doesn't work. So it's just about working out what they're trying to achieve and then having things in place to try and achieve that. So best thing to do if you've got a plaster one is just to give us a call and we'll have a look at the land value versus the improvement value and have a discussion about what the plan is.
So Laura, let's go back to your scenario just now where clients are bulldozer the whole thing. So do you need to have a condition for that before the money can be drawn?
A condition for the
Condition that he will actually pull down the whole thing.
We do have various conditions, so if he doesn't pull down the whole thing,
Yeah.
we're technically safe on the land. So worst case, we would mortgagee sell it as what it
The land
is.
value.
Yeah. So if we got to the end of the loan term and you hadn't done it, we'd go, well, why haven't you done it? What's changed? If we don't like what we hear, you need to refinance. If you can't, then the property's on the market. But we keep in touch with you throughout to go, you know, what's happening with that one? You know, are they on track for? And I'll say to you, oh goodness, I think you need to start looking for somewhere else because I don't think we're going to roll this one if it comes to the end of it. We also, vice versa, have a condition that they don't demolish things. So if you bought a piece of land that's got an old house on it, we know the future intention is to knock it down. That house actually has value from a lender's perspective because you can sell it as not just a development. So we condition that you don't knock it down until we've agreed on that. So, yeah, but we try and keep the conditions pretty simple.
How about leasehold land?
Leasehold, we don't really like. Very difficult. Over the years, the few that we've done, we've typically hooked in other securities. So although we've got that one and it's our primary security, we've got enough comfort from better stuff. The one leasehold that I did down at the waterfront, he leveraged against it to bring a musician from offshore. So it was a bit speculative anyhow, but he thought he was going to make lots of money. He didn't. And over the course of the 12 months, I think it was, maybe we rolled it 18 months, the value just went down, 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 down. So that was a real eye-opener for me, why we don't mean a leasehold. So yeah, leasehold pretty tough, unless you've got other security put in the block for us. Really on apartments, doesn't matter the size, as long as you've got an exit, commercial properties, large blocks of land, small bits of land, you know, you name it. Things that the banks don't like is where there's an opportunity for us to potentially do a deal. Right, so can anybody tell me, one more, what the dollar volume was that we've written in the last 12 months?
I have no idea.
Well done, did you write it down? Oh, well done.
Yes, you would appreciate
Yeah?
it.
Okay. And that's it. So is there anything in there that you're not sure about? Any other questions? Yeah.
Yeah.
Can the client capitalise the fee and the
Yes, so we always capitalise the fee.
Always.
So if we went to 75%, they'd need a 28% deposit so that we can capitalise the 3% fees within that 75%. Yeah. That's
So if the client wants a top-up, would you do that?
Yeah, absolutely, yeah. I had a chat just recently, I don't know how to go for time, got Jeff time in there, which was a really tough scenario. He had bought a section in Tuakau off his friend who said, yeah, but if we get to the end of the settlement period, I'll just extend it for you. And he had relocated a house on there, he had it connected, but he hadn't finished it, still had the connection of bits and pieces. When the mortgage broker first came to me, he goes, oh, I've got this new bill into a cow, low LVR. I said, yeah, I'll look at that. And then when I got the contract, I saw it was a relocated bill, and I said to the broker, did you realise this was a relocated bill? And you Google it, and it was clearly not close to CCC, whereas he thought it was, almost finished. He goes, oh no, I didn't realise that. So the scenario changed as we went through this process, but he had, I think it was more than 10 adverse credits. One was to a plumber, which when you're in the trades, you don't want to start doing that. So we had adverse credit, relocatable home, no CCC. It was a lowish LVR. So I went to the directors and we charged more for that loan because the person who had sold it to him had since committed to another purchase and he wanted his money. So the friendship thing had kind of gone south. This guy's potentially going to lose his home, the deposit, everything that he'd put into this so far. Bad credit, self-employed, it was pretty tough. So we did that deal. Then about 2 months in, he's doing his works and he starts to miss payments. So I'm on the phone, you haven't made your payment, is there a problem? It's like, oh, I've got some money coming through from somebody that owes me some money, rah. Okay, so we're monitoring it, then he misses another payment, he made it up, this is another payment, still didn't have CCC, which should have taken him a lot less time. Where's your CCC, where's your CCC? Finally gets CCC and he's had overdue payments and he's overdue still on one payment. And he asked me if we'd give him a 10 grand top up previously, and the director, when we didn't have CCC, had said no. So I went back and I said, because he asked for it again, I said, sorry, because of the overdue payments and the time it took to get CCC, we can't give you the 10 grand. CC the director and on it, and he comes back and goes, oh, I'm relaxed about it now, you've got CCC, we'll give him the money. So I had to go back and go, actually, 5 minutes later, we will give you the money. So we did a variation document, so it's in-house, there's no lawyers. We deducted the late payment from the 10 grand, and we've given him the 10 grand to hopefully continue our interest payments, and hopefully he gets a sale before Christmas, so we don't have to roll it again. But that's how we roll versus some of our competitors. It just doesn't happen that way, and you'll only see that by going through the process. So for people that are really trying to turn things around, we'll work with you. We do top-ups.
Do you come in as second motor or no?
Pretty rare. So in 9.5 years, we've probably done 4. And if we were going to consider it, we'd need lots of money available. And we would need the loan-to-value ratio across the first and the second to be less than 60% probably. And the second mortgage would need to be more than 200. So that really limits the scenarios where it works, because there's a lot of work in the second, and the second mortgage is obviously a lot more expensive. So you're looking at sort of 14-15% interest rate, 4% fees, and we have to typically get a deed of priority. So that basically means we don't do seconds. Yeah. Often we take caveats on other people's securities to bulk up our primary security. That's unregistered caveat, just goes on their titles. Any questions?
Going back to the first home buyer just now, I didn't get it. Why did she ask for help?
So the 2 factors for her, gifted deposit,
Yeah.
they don't like, and she needed broader income to bulk up her salary.
Yeah.
She needs to show history for them to then be able to get the servicing to fit through the banks. Yeah. So you can say that I'm going to have a couple of orders, but the banks now, as far as I'm aware, want to see it, having been going in for at least, I think
You
it's 3
don't need
months.
to see it.
We don't need to see it, no. I don't know, we didn't capitalise the interest on that one, because she had a good job, she had the support from her folks who'd given her all this money as well. We've had the conversation, she's like, yeah, this is what I'm doing, I can meet these interest payments. So we go in good faith that that's the case. Yeah. And you get a feel for the people, you know,
Yeah.
whether they're up for it or not. Yeah.
Sweet. Good morning, everyone. Thanks, Rainy, for the introduction and for having me over today. I'm Parash from ASAP Finance. Quickly give you a background about the company. We just do property. Don't have any other form of lending, so no consumer finance, nothing. So property is what we do. We've been in business since 2004, so fairly long time. We've seen the ups and downs, survived to tell the tale. So yeah, in short, who's a client? Anyone who doesn't qualify for bank funding, has a short-term requirement, typically 6 to 12 months, and has an exit strategy. You don't need a watertight exit, but as long as there's a good exit strategy, we can possibly help. So that's typically our client profile. Now, that covers a whole lot of people. Primarily, we end up dealing with a lot of developers and builders. That's possibly our biggest categories of client. We do obviously do investments. We do people who are self-employed looking to raise money to invest in businesses, etc. Underlying security has to be property, first mortgage. So that's the type of funding offered. Pretty standard construction. The bottom two, underwrites in joint ventures, that's limited, but occasionally you come across those opportunities, and I'll just touch on them a little bit. So the first four, I guess, is pretty simple. Underwrites, usually it happens quite a bit in a rising market. So let's say you're a developer, you go to the bank and say, I'm going to develop this block into 20 lots, and the bank says, I want 10 pre-sales. And you as a developer know that between now and the time the titles come on, there's a chance the property would have appreciated 5%. So as a developer, you're telling the bank, no, I'm not going to get pre-sales. How about I get you an underwriter? So an underwriter comes in and says, okay, we underwrite to take the bank's debt if the underwriter is called up. So typically a bank will say to the developer saying that by this date, after titles issue, if you do not repay us, we will call up the underwriter, which means we as an underwriter step in and buy those sections and pay the bank. So bank's intention is very simple. They want the debt repaid. They want security of the debt being repaid, which is either through pre-sales or underwrite. So we've done this, a few of these in the past. Not so much this year with the market sort of more subdued. People like to get pre-sales, certainty of pre-sales. But for example, we did one in Albany where when the client came to us, the sections were valued at $280,000 a lot. The bank wanted pre-sales. He said no pre-sales. We came in as one of the 3 underwriters and we underwrote 20 sections at about $220 a section. By the time he completed and got titles, remember he had not got a single pre-sale. At that time, the demand was so high that what was valued at 280 ended up selling for 440. So you can imagine if he had locked in those pre-sales, the loss he would have had in terms of opportunity for net profit. So that kind of situation does happen from time to time. Joint ventures in private equity, again, it's a small part of our business. We do have joint venture partners that we will fund and come in as an equity partner rather than a debt funder. So clients, all of those, specifically I'll talk a bit of developers and builders because that's a key area for us. Especially in today's market when banks are pretty much shutting the door on developers. They work, they'll put all sorts of hurdles in front of a developer and builder to get funding. So these are, feedback that we get from regular clients, saying it's difficult, it's painful, pre-sales, a lot of hurdles. These are, that's the feedback we get all the time. Every year we probably fund over 100 houses across the country. This is just pure building houses. Apart from that, we do a lot of subdivisions as well. So, hurdles with the bank, pre-sales, asset finance, probably not required. Valuations, again, with ASAP, not required. These are, I'm talking about single houses. So, to give an example, if you go down to Flatbush or Silverdale or Millwater, any of those new suburbs, what is the value going to add that I already don't know? There are hundreds of sales, open market. I probably funded 10 of them, so I have internal data. So my approach is, well, I tell the builder, the clients, show me your plans. So I said, it's a 2-bedroom, a 2-level, 5-bedroom, 3-bathroom, double garage house. There's 5 of them in and around that have sold for that much. I have funded 2 of them. I'll tell the client, look, I don't need a valuation. I'll save you $1,500. That's the value I'm going to carry it at based on these sales, which are in front of you. And the client will almost all the time accept that because that's the market value. So valuation is not required. Progress valuation QS report. The bank will ask a valuer who firstly is not qualified to give you a report on progress valuation. If you want it, you need a QS. But bank will typically tell you, okay, you want a progress drawdown valuation. Valuer goes on site, comes back, submits a report, goes to the bank, gets lost for 2-3 days, then someone attends to it, and you get the money. And the cost to you is about $650 for the progress value to go in. We don't do that. We have a fixed schedule. We should give it to the client on day 1, showing what amount of money will be released at what stage of the billing. As long as the clients met that stage, they call us saying, hey, I've got the roof on, can you come by? We'll drive down, have a look at the property, have a look at the inspection, everything's in order, come back, release the fund in 2 hours. Yeah. So one single house that could take 6 to 8 months with a bank, a typical builder, a repeat client who understands the systems can build in 4 months. Now you work out the cost of 4 months time, it's a lot of money that a builder can save. And site visits are free to the client, we don't charge for them. Not only in Auckland, we don't charge for them anywhere in the country, full stop. It's free. Banks will only fund on fixed price contracts. This is now even more, before they would sometimes make an exception and say, okay, I'll fund on a labor only. Now, no, fixed price contracts. But most of our clients, actually project managers, they have the expertise to get all these subbies together and build. But the banks won't lend to them. No problem with us. Limited number of builders. Okay, we'll work with G.J. Gardner's, David Reed Homes, Generation Homes, that's fine. But not everybody can afford those guys, and not everybody might want to build with them. So, again, like I said, we can work with project managers, we can work with master builders, certified builders, doesn't have to be the top builders. No flexibility payments, the bank will only follow the QS, they will not make discretionary payments. We have all this flexibility because we've done hundreds and thousands of them, and we do that for ourselves as well. We're just not property funders. We own commercial property, we do large subdivision. We're currently building an apartment complex in Auckland City. So we have the ability to put ourselves in the client's shoes and understand the practical difficulty of a project rather than going strictly by the book. Banks don't like short-term loans, 6 months repayment, after 6 months, well, the bank will say, I don't earn a buck of it, forget it. Financials don't require. Servicing criteria, we almost capitalize every loan that on a construction loan, we'll capitalize it. And credit blemishes, I guess you guys know that more than me. I mean, most of our clients have 1 or 2 issues, but that's not really a deal breaker for us. Coming to repayment options, we have all these options. The top 2 are the most commonly used. Interest only, if it's a standard investment type loan, capitalized interest if it's a construction development loan. Sometimes could be part interest if the client can only meet part of the servicing cost. The other 2 not really that used. Lending criteria. So our minimum loan size is 200,000, maximum is 20 million. Sometimes can be a bit higher. At the moment, for example, our biggest loan on the book is 21 million. Smallest one is 140,000. So we cover a wide range. So typically among the non-bank market, you'll find that as long as the loan size is, let's say, 2 million or below, let's say you've got a client who's got a property worth 1 million, 1.2 million, 170%, and you go, for some reason doesn't meet bank's criteria. You throw it out in the non-bank market, you'll probably get 10 offers in the non-bank market, because everybody loves that. Residential, 70%, below $1 million, perfectly. But what you'll find is as the loan size goes up, 2 million, 3 million, 4 million, a lot of options will dry up. Construction development, again, a lot of people will say, nah, not really that keen. So we can do the small loans, but is that we can do a lot of the large development, construction type deals, land banks, all of that, which a lot of the lenders may not be able to do. Maximum may be up to 70%, 12 months, first mortgages from New Zealand. We do rollover loans. Again, at rollover, one of the things that I always find with a lot of non-bank lenders is that, let's say you've taken a loan for 12 months, and this typically happens with development funding or construction funding where the options are very limited. So if someone's starting a project to build let's say 5 townhouses, he gets to the end of 12 months, all these townhouses are at various stages of completion. You try and refinance that loan, I can tell you that no one will want to touch them. Who wants to take on a loan midway through construction on 5 houses, let's say on a single title? It's a complete no from any other lender, apart from the one that's currently in there, because he has the whole history. So if you want to roll over that loan, you go to the lender, he may have charged 2% originally for 12 months. He can say, I'll charge 2% again for 6 months. Why? Because they can. We've got nowhere to go. Our approach is that we charge on a pro rata basis. So if you have paid 2% fee for 12-month loan, you want a 6-month extension, I'll charge you 1%, which is half. If you want a 3%, 3-month roll, I'll charge 0.5. The idea for us is to keep the same finance rate, not necessarily ping the client just because we can, because he's got nowhere to go. Again, these are things that we see very often, and there's nothing wrong with it, but we just think that that's probably not the right way of doing it. So interest rates between 7.95 to 12.95, application fee 2% plus brokerage, which is typically 1%. Unless you've got a mandated client to charge higher or less, we can do that. That's no problem. So we work on a finance rate, which is made up of the fees and interest. So typically, the way we work is, hey, this is a very standard loan. We're charging 2% for us for 6 months plus 9.95 interest. So 2% for 6 months is 4% annualized plus 9.95 gives us a finance rate of 13.95. Same loan for 12 months, we'll say 2% plus 11.95 still gives us 13.95. So one of the things that we find a lot of clients do is they look at the headline interest rate. Oh, 7.95, 6.95, 9.9, whatever that may be, and they say, I'll choose the shortest term. That's not really very helpful, because ultimately, whichever way you look at it, your monthly or your finance cost is 13.95. So if your finance cost is the same irrespective of the term, what you should try and do is take a longer term and repay us early. If you finish the project early, then cutting it very short and then doing a rollover, and then more cost, all of that, more hassle. So if you think your project is going to take 9 months, take a 12-month loan. Sure, repay us in 9 months if you finish early, no problem. We don't have early repayment fees. If you give us 30 days notice, we don't have any early repayment fees. So you're better off taking more time, having a bit of buffer in the event that things don't go according to plan. Because the cost that you're paying, like I said, is the same. It's the same finance rate. So how are we different? Touched on all of them. Construction, subdivision, underwrites, loan size. Yeah, so definitely do the large deals. So that's something that we think is a big advantage with us, because once your loan size goes beyond 3-4 million, you're looking at very few options. And 3-4 million in Auckland nowadays is, you build 5 houses, that's like a $5 million project. So some typical fees that we do not charge. Now, at the end of the day, every finance company or non-bank lender will achieve a certain finance rate on their loans. That's how it is, because finance companies are funded by the bank and then they're on lend. So they have to achieve a certain finance rate. Unless you're a private lender or a solicitor funds, you cannot really lend at below 10%. It's just not possible. We know that for a fact. However, you can very cleverly put things in a letter of offer that makes it appear very cheap. So for example, I can put an interest rate of 7.95 and then put a line fee of 0.25% per month, which adds up to 3% a year. Now, I can very cleverly put that in. I can put monthly admin fee of $500, site visit fee of $500. I can put all those fees that doesn't appear in the headline. When you look at the headline rate, oh, it's very cheap, very cheap. I'm comparing lender X versus ASAP, very cheap. So I go with lender X. Trust me, when you go through the offer in detail, you'll end up in the same position. Because just because we don't like to put all those different fees in there, and the reason for that is at the end of the loan, when the client has to repay, the client will realize that, hang on, the interest rate was 7.95, but that's not what I'm paying. I'm paying a lot more, because when I look at the numbers, I paid for all these costs. The actual finance rate that I'm paying is actually 15%. So, I mean, these are things that, again, a lot of lenders do, and it's fine, it's industry practice, but we don't like to do it. So, line fee, loan revision fee, monthly admin fee, site visit fee, we don't charge all of that. So what we offer is simply a fees upfront, interest rate, which is disclosed right at the beginning, and legal costs, which is disclosed right at the beginning. After that, there's pretty much nothing in there. I guess everyone says that, but yeah, we're a small team, just 5 people. Our directors, we don't have a separate credit committee that we have to approach and ask. Our directors are there inside the office every day. So all we have to do is discuss the deal, run it past them, and you can have an approval within 2-3 hours. Settlements, especially relevant now, leading up to Christmas. Our solicitor is there till the 22nd. So if you have last minute urgent settlements, do not think, oh, solicitor's gone away. We are there till the 22nd. We have the ability to settle loans till the 22nd. So don't be afraid to give us a call and find out if we can assist. So that's just in terms of presentation. Just quick example of a recent loan. I think this is quite important because every lender has their own strengths. So if it's a standard investment property, 60% geared, we possibly cannot compete with the likes of FMT, and we don't have any problems with that. We're just not going to be as competitive price-wise as an FMT. But it's important to choose the right lender for the right deal. So a recent example of a deal that we've done, clients building 4 houses in Papatoa. It's currently on 1 title. So what happened was he started building, the current lender kept funding him. And one fine day, Auckland Airport landed up on his doorstep and said, you can't build anymore. He said, who are you and why are you here? What he didn't know was that Auckland Airport, because it's a high aircraft noise area, requires a certain specific type of insulation, a specific type of doors for all houses falling under that area. My client is at no fault because he went to Auckland Council, got a building consent, got a resource consent, got all the consents. Nowhere in the consent did it specify that you need X type of insulation, X type of door. So he was building a standard product, which he has done many times. So he didn't know that. Anyway, Auckland Airport came and stopped the work. Because the work stopped, the lender said, oh, you went default, your work has stopped, no more funding. And by the time Auckland Airport had put a caveat on the titles as well. So we went in and talked to Auckland Airport saying, you've got a caveat. You don't need a caveat, you need an easement or a consent notice on the title saying that any house built in this area has to meet this standard. So have it on the title as a consent notice so that any buyer buying it has visibility. Secondly, let's try and resolve it. So we did a test with the client. The client closed off one room, put insulation, put the doors. Someone from Auckland Airport came in and did a noise test and said, yeah, that's fine. So if you replicate this particular room across all the 4 houses, same insulation, same doors, good to go. So they removed the caveat, put a consent notice, got the solicitors involved, refinanced, and we've since been funding the client. So the message is that sometimes with developments and construction, things can go wrong. Sometimes things are beyond control of the client as well. But as a lender, the lender who was previously funding it, they were perfectly right. They didn't do anything wrong. The client was in breach of his obligation. But the fact is, there was a solution. The idea is to find that solution. And we could, because we have seen many different types of situations like this, where, sorry, you can't move a crane on top of your house because that crane has to come through the neighbor's property, and all the air rights on top of the neighbor's house belong to the neighbor. So the neighbor says, no crane on top of my house. What do you do? But these are practical issues that happens with construction and development all the time, and we think we can resolve them a lot better than any other lender because we have practical experience of doing our own projects whereby we've learned over the years what can go wrong, delays, all sorts of things can go wrong, and we can possibly resolve those things better than anyone else. So yeah, that's a real example of something that's happened very recently. But yeah, I mean, we lend. Don't think of us as just construction and development lenders. That's a focus area because that's, I guess, an area that I wanted to touch upon today because banks are being so tough that you might have lots of opportunities to help clients in that area. But we do investment properties, we do land bank, we do clients who need money to put into the business. Less than 1 year in the business growing, banks will say no, you don't have financials, etc. So we can do all of that as long as in the short term there's a decent exit strategy and it's got property as security. So yeah, feel free to ask any questions. Happy to answer them.
What's the rate for commercial property?
Our rates are the same, still the same. We have the same fee structure for commercial or residential. One thing that I'll say is that we don't really do owner-occupied properties held under personal names, simply because it's a triple CFA loan. We can do it if, for example, someone has an owner-occupied property and he wants to borrow against that owner-occupied property to build 5 investment properties. That's fine. That's not a consumer loan because triple CFA is driven not by the security but by the purpose. So as long as the purpose is not domestic household or personal, we can do it. But if you first-time buyer wants to buy a house to live in it themselves, they're buying under personal names. That's not really us. Because firstly, we're not geared to do triple CFA loans. There's a lot more regulation around it. There's a lot more disclosures around it. And I guess it also calls into question of whether we are doing responsible lending or not. Because if the client cannot get bank funding to buy owner-occupied property, then really we probably shouldn't be doing loans at 10% for owner-occupiers. So that's our view. That's the reason we don't do triple CFA stuff.
You would do them under a family trust though, wouldn't you?
Family trust is different because if you're under a trust or a company, you obviously try and hide behind a trust or a company. Then sure.
just wondering if you could go through, I'm not sure if you covered it before, but what's the sort of amount of funding that's available through ASAP?
Amount of funding? So as you know, finance companies, there are two broad categories. One category is the one that borrows money from the public, like an FMT, and the others, where we are, is typically called, we don't have money borrowed from the public, so all our funding is through banks and private equity, basically the equity of the business. So within that category, I think we would be probably the largest because we've got a loan book of circa 170 million as of today. So yeah, so that's a lot, and we have the capacity to today, the capacity to around 30 million of loans today. But it keeps changing because short-term lenders, money keeps coming back. I was just talking to Rupert and saying that last week we got 8 million back on one day. So the downside of doing some of the big deals is that money comes in big chunks as well. So, but yeah, as a non-bank lender, non-deposit taking non-bank lender, probably biggest in the country.
Did you say you do self-builds?
Yep. Yeah, as long as the purpose is for investment or development with the intention to sell or keep it as investments. If it's to build a house, to live in the house yourself, under personal names, probably not, but under company or trust. Yeah.
And do you look at builds in Queenstown?
Yeah. We've done, last year we did about 5 houses in Jackson.
And typically is it 70% of in valuation?
So typically 70% of in valuation ex-GST. If it's a builder developer, if it's an investor, no GST. What we try and assess is real equity in a deal. So typically we need 25% to 30% real equity in a deal. Now, sometimes you can get a situation where it's an extreme example, but let's say you bought a land for $1 million and you go and get a resource consent and building consent, whatever, and suddenly it values up to 2 million. Let's say it doubles, which is an extreme example. So the client can come and say, hey, I've got a $2 million asset. And when he bought the $1 million worth of asset, he may have got money at 80%. So he's only put 200K. And he's saying, I've got 2 million and asset only 800K lending. But what the test we apply is, well, what's the genuine equity in there? Because the risk is that if your margins in a project are very high, your equity will always be inflated. So we look at two things. What's the cost? What's the in value? Because what we try and say is, if the cost is X, is he putting 25% minimum of the cost? That's test one. Test two is the value. In value, is it on that basis does the equity stack up? So sometimes you get a rare scenario where on valuation we may only be at 60%, but on cost we're at 75% because the margins in the projects are that good. So we say, okay, your cost land plus build plus council plus interest, all of that is X. You need to put 25% or 20% of that for us to be able to live. As lenders who don't really look at financials, income, a lot of stuff that the banks do, our only sort of safety or guarantee that this guy will perform is that if he's got hurt money in the deal. If he's got very little skin in the game, first sign of trouble, he'll say, see you later. I don't want to be here. So that's what we're trying to avoid, because we have seen through the last GFC what can happen and how quickly people can just leave and run, but they won't if they've got enough money. They'll try and find a solution, work with you, try and make sure that their equity is protected. But at 5%, that's why sometimes we've seen a deal recently in Tauranga, for example, where there's 12 properties, brand new properties to be built. The contract says 10% deposits. all the buyers are private sales. All the buyers, without sounding racist, but all the buyers are from the same community as the developer. All are private sales. The contract says 10%, all of them have paid 5% only deposit. The client wants us to do a development on the basis of that. Firstly, the sales are inflated, doesn't reflect market. It's in, doesn't meet the terms of the contract. Instead of 10%, they paid 5%. And there's not a single open arm's length sale. So the thing is, you can't rely on those sales and say, I'm going to lend you what is asked for. Because chances are that just those sales are there to influence the lender. It's actually not real. So you just have to be mindful of all those sort of things when doing developments. Any other questions? I've got some brochures at the back with me, so feel free to pick them up. Like I said, we are here till the 22nd, so last minute deals, feel free to call me and have a chat. I'm more than happy to help if I can. Thank you.
So my name is Chuck and I'm the CEO of a company called Trail. And what we do is we make relentlessly simple and easy to use software for New Zealand mortgage brokers. We're passionate about making technology easy for advisors to adopt into their businesses. Unlike other products on the market, Trail isn't an off-the-shelf CRM. It's not just a CRM. It also works at all of the key stages of a mortgage broker's workflow. For example, Trail will make it easier for you to generate business through your website. It can also put your application process online. It can automatically request documents from your clients. It'll help you complete bank servicing spreadsheets across the main banks. It'll help you produce paperless lending applications to send to lenders. You can also create a customized online sales process that you can either do with your clients face-to-face or online. Trail can automate the process of confirming loan structures, and it keeps your data up to date through time, which is going to increase the value of your business. The last thing that Trail can do to help your business is it can also automate the fixed rate rollover process, which can take a lot of time and effort to manage properly. So I've only got about 5 minutes, so I want to give you guys the big idea. And then what I'll do is I'll take you through a demo of the product. And if you have any questions during the demo, you can just call them out and we'll answer them as we're going through the demo. So I want to ask you a question today. Does technology pose a threat or an opportunity to your business? This is a question that I ask advisors quite often when I meet with them, and I usually get quite mixed results. Some people are really for technology, and some people do think that it's quite a threat to their business. But what I know beyond all doubt is that advisors are used to software providers over-promising and under-delivering. And that's exactly what we had as an experience. So prior to starting Trail, my co-founders, Ben, John, and myself, we actually ran an online mortgage broking business for 2 years. And when we couldn't find the technology that we needed to run our business, we built it ourselves. So around the middle of last year, I had a really exciting opportunity. I got to go to Singularity University in Christchurch, which is hosted by these two preeminent futurists, Peter Diamandis and Ray Kurzweil. And I definitely encourage you guys to look them up if you're interested in technology and what technology is going to do to industries. While I was down there, they shared a number of really fascinating points with me. 2 of them I want to share with you today. Firstly, in 2015 and 2016 alone, more data and information was produced than in the preceding 5,000 years. What this told me was that there's an abundance of data moving online and people are adopting technology at faster and faster rates. Secondly, of the top 50 most viewed websites in the world, only 2 of them were companies 15 years ago. That was Amazon and Microsoft. And what I learned from this is that technology is having a huge impact on established industries. So I left this thinking, why is it that technology is moving ahead so fast, yet mortgage and insurance advisors have access to what is quite clunky and old systems, and while a lot of them are still using paper to manage very significant parts of their business. What I found was that the stuff we were developing for our own business was quite far ahead of the products that were on offer to advisors in the industry as a whole. So the next thing we did, so that's Ben and John, my co-founders, we went out and we spoke to as many other advisors as we could. And we learned that the pain that we were feeling in our business was actually shared across the industry. So we sold out of our advice business and we doubled down on bringing great software that's easy to use to advisors in New Zealand. So this is Trail. It's a culmination of years of testing within our own business and also great feedback that we get every day from the advisors who are using the system today, of which we have Mortgage Lab, who are here today with you guys. So they were one of our first clients who came on with us earlier this year, and the feedback that they give us is pumped straight into improving the software. Yeah, and that's one of the keys to our success today, I think. It's really letting the users help us dictate where we should be spending our development time so that we're building a product that people actually want to use and that's actually useful in their businesses. Cool. So as I look at the insights that we've gained from people like Mortgage Lab and also from within our own business, there are two key things that stand out as realizations that tower above all else. The first one is that mortgage customers, young and old, are much more willing to do business online than we give them credit for. It's not the only way to do business, and it's not to say that everything you do should be online. It's just to say that your business can be made it can be much easier for you to run your business, and you can actually make your clients' lives easier too. The second thing is that change is coming. Whether we like it or not, technology is affecting all industries. So, as the great Charles Darwin said, it's not the strongest species that survive nor the smartest, but the ones that are most adaptable to change. I want to revisit the question that I asked you earlier. Does technology pose a threat or an opportunity to your business? If you're an advisor who's skeptical about using technology in your business, you're probably right to be. It can take up a lot of time to implement new technology. It can potentially cost a lot of money if you get it wrong, and it's something that you should be wary of. However, it is possible to mitigate these risks. One of the things that we do at Trail is we have a very, very high-touch onboarding process. All you need to do is give us the data, and we pretty much handle the rest. All of the setup of your branded client portal, we can handle it all, because we know that we want you to have an experience whereby you are seeing value from day one. So, if you're interested in the software at the end of this demo, it'd be great to hear from you guys. Unfortunately, we're actually not taking on any new clients this side of Christmas, but we are looking for the right people to partner with moving into the new year. As I said, it's part of only bringing on the right clients at the right time so that they really get good value. Cool. So in order to properly understand how the software works, because there's quite a bit going on, the best way is to think about it as having three different parts. The first one, where we'll start the demo, is your branded client portal. So this is what gets set up with your business colors and can be available either through a link in your signature or as a Get Started button on your website. This is where you can request for online applications to happen from your client, and they can also upload documents, and you can undertake sales and mortgage reviews with them and confirm final loan structures. So next up we have the application editor. So the application editor is where all of that information gets stored and managed through time. Here you can log in and produce a lending application that'll get sent directly to the bank. The application editor also helps you fill out the bank's Excel servicing spreadsheets and can be used to request further documentation if required. Cool, so next up is the CRM, and this is what you guys might be a little bit more familiar with if you are actively using a CRM. So this is where you can manage your clients and your pipeline of information and kind of your workflow to work out where your time and energy is best spent. So this also stores customer data through time, and as you'll see, it's really uniquely set up for mortgage and insurance advisors in New Zealand. Cool. So we'll get into the presentation now. And the first thing that I'd like you to do is just think about what is the one biggest pain point that you have with your internal systems and processes. And when we're going through the presentation, it'll be great to know by the end of the presentation whether or not that's been mitigated through the software product. And if it isn't, I'd love to hear from you afterwards so that we get a good idea for where we're sitting in terms of what everyone wants and needs in their business. Cool. So what I'm getting into to start with is a yes, let me go. Maybe you should use that on this computer, so if you know. You can run a software business and still stuck with technology, don't worry.
Are you running on the same screen?
Do you want to come and be tech support? Do you think that you'll know, or could you please come and give us a quick hand? Yeah.
Sorry about this, guys.
Go for it. Yeah, I always say refresh the page. Usually helps. Thank you. Who's this? Awesome. So. Cool. So we'll head along to, we'll pretend that Trail is a mortgage advice business. Okay, this is.
So it's a web-based application.
Yes, that's correct. So all of the client-facing stuff works really well across browsers.
Yep.
Just try and make it scale a bit better. So from here, the client will get to this page in one of probably three ways. Either you would have gone into the CRM and you would have sent them a unique link, or they would have gone onto your website and clicked get started. Or they could also get here kind of through a link in a signature of yours or something along those lines. So they'll need to register to get started. So
those are the mandatory fields for our client?
yes, so to get started, these fields are mandatory. So this is going to create a contact in your CRM. So we want to make sure that you guys are getting all of the information. So even if the client starts right here, you can still call them and get them on the phone and meet with them.
What about, can they simply, from email, can simply put a fictitious email? Will that work?
Can they put a fictitious email in here?
Yeah.
Yes, they can. Yeah. Yeah.
So you still can sometimes get junk mail.
Sorry?
Sometimes you do get junk mail through that way.
Yeah. Awesome, cool. Okay, so this is the branded portal and it's taken us straight into our first mortgage application. So the client will be prompted all the way through. So we might want to do something, we're going to refinance a loan, we'll purchase a property, and we'll also do a small top up. And the form just kind of builds as you go through. So the client wants to get a better interest rate. They also want to buy an investment property, and let's say that they want to consolidate some debt. So everything that the client's putting into the software is starting to build out the form nice and cleverly in the background to get you the information that you need. So next up, we're going to find out information about the people. So first up, we're being prompted to put information in about Hannah Mason. And if she was to live somewhere that wasn't New Zealand, we'd be asking about residency. So the form is smart and tries to figure things out for us. So Hannah might be married, so she can put in her partner's name. And let's say that Hannah is getting a salary Can you guys see that okay?
Yeah.
Cool. There's plenty of seats up the front if anyone wants to move up. Awesome. So certain fields aren't required from the client. We're just trying to make it as easy as possible for them to get through the process and get you all the information that you need, and also give the client the option of putting in more stuff if they feel comfortable to. Cool. And let's say that this client is self-employed. So cool. So next up, if the client has quite a complex situation, they can also add in information about their look-through companies and their trusts. So the way that all of this is designed is to almost be like infinitely scalable. So let's say that there were parents involved in this application. Those could be added as new people. Or if they wanted to tell us about a trustee, that could also be added as a new person. So we'll say that they have a look-through company, and so we'll go ahead and search for Mason Investments. So this direct feeds into the New Zealand Business Database and pulls out all of the look-through potential companies. So we'll go with Mason Investments 2011 Limited, and both Hannah and Ryan are directors of the LTC. And we could also put a trust in if we wanted to. Cool. So we'll go ahead and add in the assets and liabilities. So they currently own a property at 3090 Devon Road. Which is their primary residence. And it's owned by them in their personal names. If you wanted to, you could add board or rent to this as well. And it pulls the property up. So next thing that we have is their rental property. So 32 View Road.
So this is linked to QB?
So it's not linked to QB. We did it previously, but it's the API is not very stable.
Oh.
So it's really important that with the stuff that we get clients to go through, that it works every time. Yeah, that just links to Google's API to pull up the address through the address finder. So we'll say, and we'll say that this is an investment property owned by the look-through company. And so it's automatically asked us to put in some rent. Maybe they're getting $800 a week. Cool. So they also said that they wanted to purchase property, so that's come into the form as well. But like most people, they don't know what the property is. They want to get a pre-approval and kind of see what progress they can make. So we'll just tick that the address is going to be decided, and hopefully we can get something for $950,000. It's going to be another investment property, and it's going to be owned by the look-through company. Hopefully we'll get $750 in rent. Cool. So next up, we've got to put in some information about their other assets. And again, this will pull the right questions in based on what type of client they were. If this was a first home buyer, it will be asking them if they qualify for a home start grant, do they want to use their KiwiSaver, that type of thing. So we'll go ahead here and say they've got 50,000. They don't have a gift. Hannah has some KiwiSaver. Ryan has nothing. They've got some cars. And it's also pulled in Ryan's business here for a value as well because he's self-employed. And they also have mortgage on their existing primary residence, so we'll say that's floating. Let's say that's with ANZ. And they might also have one over the investment property, so we make that a fixed loan. And that's going to expire, say, on Friday. Cool. So the power of the form is that it's infinitely scalable. So if they've got a really complicated situation, you're going to be able to get the data in a format that's actually really, really easy to use. So they said that they wanted to consolidate some other debt. So we're going to add in a credit card here as well. Say it's got a $20,000 balance. 25,000 limit, and it's a 20% interest rate. Cool. So where we think that the clients need prompting, we'll provide them with tooltips as well. So they're not going to know what paid in full means, so we try and explain it. Cool. And when we've finished that, we can go on to the household section. So as the client's going through this process, if they drop out at any time, all of the information's automatically saving and dynamically updating on the application editor, which is where you log in. So if a client gets bored or if something goes wrong, they can hop on the phone to you straight away, and you can literally log in and see the information that they've put in so far and add to it as well if you need to. Cool. So their household has been selected as 39B Devon Road, which is their primary residence. So they've both been living there for 6 years. And they have 2 dependents staying with them. The age of those dependents, 12 and 14.
What about if the household address, you put it 2 years, will it
Yes.
pop you for additional address?
Yeah, so let's say that Hannah had only been living at the property for 2 years. So they're going to ask for her previous address. Okay. So cool.
If it's overseas, you just put overseas, like wherever it is.
For overseas, it's
Yeah.
probably something that we should build in. Yeah.
Oh.
Yeah. So there you go. There's the first one. I think, although it's the Google API, so it should actually pick up the overseas address. It should be fine.
Okay.
Yeah. It just won't come up with a property. So next up, we're going through and sorting out their income and expenses. So we have salary for Hannah because she's obviously earning PAYE income. So she's on $120,000 a year. And let's say that Ryan's on $100,000, and because he only knows what he made last year after tax, he can put it in after tax if he likes. And we've also picked up those 2 rental incomes, and if further rental income needed to be added, it could be done pretty easily from here as well. So next up, we ask them about those household expenses that they have. So I'll just go through and put some in. Cool. And then they can go ahead and submit that to the advisor. So as I said before, all of the information is already there for you. It's just about giving them a kind of a pat on the back for making it this far. So from here, the software is automatically figuring out what kind of documents are required by the client, and it's going to ask them to upload those straight away. So you'll also have a chance to go back over that list on your side of things to double check that it's all correct, and they might have other things that you want to request. But otherwise, it's all available for the client straight away if they just want to get through everything all at once.
So you can actually, like, once you talk to them and then you can go back and change it?
Yes, yeah, so you can change everything. Yeah,
So
on your
because
end.
they may not fully disclose the assets
Precisely,
that they
yeah.
have and
So,
things like that.
so clients are never going to know 100% what to tell you and what not to. So typically when you get to the point of receiving a completed application, or somebody has gone through this process, you want to give them a call and double check the information with them and say, hey, I saw you didn't list any credit cards. You know, are you sure? Tell me about the credit card that you haven't told me about. Yeah.
Where's my personal tax summary?
Yes.
Like, she might mistake it. She's an employed, so she might mistake it for her.
Yeah, yeah.
We're really only looking for self-employed guys.
Yeah, you're absolutely right. So we haven't published it because it's quite a big change, but we've updated the way that this document works. So I won't spend too long covering it today. The updated version requests it based on the individual, but also the individual credit card or trust. So it's getting a lot smart. The software's getting a lot smarter the more time we spend developing it. So from here, the client will be able to automatically download your disclosure statement, and then they can sign it, and then they can re-upload everything. So I won't upload any documents here because this is not my computer. But effectively, when the documents get uploaded, they can be labeled by the client. And what will happen is that this list will start ticking off, so they'll know the progress that they've made in terms of the documents that they're providing for you. Cool. So when they're ready to go, they can go ahead and submit it. So it's saying, hey, you forgot a number of different documents. Are you sure you want to proceed? They do. So what we'll do before we log out of the client's experience, we'll take a look at the other things that they have access to through this portal. Yes, sorry?
With the uploading documents, can they upload multiple at a time, or is it
Yes,
one at a time?
yeah, so they can drag all of them in and they can go through and just label them quickly. They can also upload multiple different file types. Yeah, so it's not specific to just PDFs or anything. We want you guys to get all of the information and then make the decisions yourself in case a client wants to send you something unique.
Just now you were saying the applicants, they can put the parents, so it can go up to 4, is that?
To be honest, it can scale as many as they put in, yeah. The more challenging thing is when that gets pulled into a PDF document. So if you had something with 6 people, we'd probably be pushing the limits of what we've built. Yeah. But give me a call and we'll go through it. Yeah. So from here, they can see any applications that they have underway. They can review any of the information that they've put in. They can also go through and upload further documents. So this is all going to be branded as your business and accessible through your website. And they can also access a number of different calculators. And then they can also see kind of the current bank's interest rates. And this is just we haven't spent a lot of time on the client portal, but it's something that over time we do want to build out as being a real value add for your clients. So it's a work in progress. Watch this space kind of features at the moment. Awesome, so the client's going to log out and they're going to go and make dinner, whatever they do once they finish with their mortgage application. And then the advisor, at this stage will have received an email at each of the most important stages. So when the client first creates an account, you'll know. When they complete the application, you'll know. When they upload documents, you're going to know. So we want to make sure, because those are the times when you really want to, if you can, get on the phone and make sure that everything's okay and that you've got what you need. So we'll start by logging in as me, the advisor. And we'll skip over the CRM features for now, and we'll jump straight into the application editor to take a look at how that information has come through on your end. So you can see that, well, this is our pipeline, and it follows through from a new lead coming into the business all the way through to receiving some commission. So we have Hannah Mason here, who's sitting automatically assigned to me, and so we're starting to automate a lot of the hard work that you'd have to do yourself. And from here, we can also see kind of what emails have been sent out so far about the client and any changes to their stages within the pipeline. So here we have an opportunity. It's automatically come up in the fact find completed stage. It has a value assigned to it based on the size of their existing mortgages and what they're trying to do. And it also has the client's motivation. So the application purpose, they're wanting to refinance to get a better interest rate. they wanted to purchase an investment property, and everything else that they put in. So we'll go through and we'll edit the application.
Does that email trail link with various email?
So what are you referring to? Sorry.
So like if you're using Gmail or
Oh yes.
whatever,
So at the
links
moment,
with that, or?
yeah. So at the moment, what it's only tracking is the emails that the system sends on on your behalf. But that's one of the things that we will probably have ready by February. Will be integration with Gmail and Outlook. Yeah. So it doesn't currently do that, but we know that it's really important, and it's one of the things we're working on. Cool. So we'll start, and you can see that this initially is the fact find. So this is all of the client's current information that's come through. So we have Ryan and Hannah, and we have their look-through company. So we can tick off this information as being correct once we've checked it. Next up, we have their properties. So if I try and tick this section off, the software is actually going to stop me because not all of the fields are filled out. So if I click into one of these, you'll start to see that this is holding a lot of the information that you guys need in order to produce a lending application. To start off with, we're going to say that we estimated the value of that property, and then we're going to put in the property types. So these are the questions that we don't ask the client because they really aren't going to know. And this one's held as security by ANZ. And then we have the property that's to be purchased. So we'll go ahead and say that that's going to be an existing developed property. Cool, so now that we've done that, good to go. Next up, we can double check the household information. If you wanted to, you could store the kids' names. Everything looks good. And then the same for assets. So from here, you guys can effectively fill out a full application yourselves for the clients if you had them on the phone. You can just add as much as you need to into this information and store it about the client. So I'll just skim over this. Am I going at a good speed and is everyone following okay? Cool. So here we have their incomes, and you can see that one of those rents has been marked as expected future rent. So one of the things that's really cool about the software is we've designed it in a way that it understands what is something that a client hopes to do and what is their current situation. So if they ended up not going ahead and buying this property and we lost this application, it would delete all of that information. But if we went ahead and we won it, it'll automatically update that statement of position for next time you deal with them. So when the client goes through and confirms the loan structure right at the end, it's updating all of their mortgage and all of their details so that you can manage your business more effectively through time. Cool, so we'll double check the expenses look good. So next up we have the two mortgages. So I know we just need to put in a current repayment status on these two. And then we have one credit card here. And what the software is doing is also giving us an estimate of what the monthly repayments would be.
3%, isn't it?
Yeah, it should be 3% divided by 12. Yeah, so let's just go 500.
So if the application includes the refinance of the credit card,
yes.
Is it smart enough to know?
Yes, so we actually, at the moment what we're doing is we're just checking through their existing position. So we haven't actually got to the point where we're kind of creating the application. So the software does start to think about that once you tell it to. So we pretty much, by going through the fact find, we've checked all of their existing info. And now we get to the fun bit, which is kind of producing the new application. So from here, you can see this one's preset based on what the client told us. So the submitting advisor is going to be me. If you had admin assistants, they can get logins too, and you can control kind of what they can and can't do. And so we're going to send this one off to, let's try the BNZ to start with. Okay. So firstly, we're going to need to put into our applicants are. So both of them are going to end up being applicants, and we want it to be just a normal priority. And there is a pre-approval in there. Cool. So firstly, the software is going to ask us, hey, how much funding is actually required after you've spoken to the client and you know exactly what it is that you're doing for them.
You said pre-approval, but it's also the ones that
yeah.
refinance and pre-approval.
Yeah, this is a kind of like an outlying thing that the banks require. There's actually a new purchase place. So you can see here I've ticked off the application type as to be refinance, new purchase, and top up.
Yeah.
So the new purchase, is it or isn't it a pre-approval? It's based on whether or not they have effectively already found a property.
Yeah.
Cool. So first of all, it asks us, hey, which of their existing ANZ loans do we want to refinance? So we're going to do both of the existing loans. Then it says, which of the properties that they said that they want to purchase do you want to apply for? So we're going to take that 950K pre-approval through. And then it's going to say, ask us why we wanted the top up. So we're going to consolidate that credit card. And we might also want to say, hey, they're going to need a bit of cash for break fees and legal fees. So let's just say 5,000. Cool. So the client needs 1.92 mil in order to get this over the line. You may have spoken to them and they might say, hey, look, we actually want to use the 50 grand cash that we have toward reducing that lending amount. So because we have no existing lending at the BNZ, the total new lending required is going to be 1.875. Sweet. So let's throw in some security and see what happens. So we're going to have to start by probably giving them the existing investment property. So LVR still way out. Yeah. So we're going to have to give them everything in this case. And you can see that the LVR comes into 53%. So it's fine. They can have up to 68% with the BNZ. So next up, just to quickly cover.
So is there a reserving rules going to filter through it?
Yes, it does, but it's only set up for main bank lending. So you kind of just have to ignore that if you were going to do like a 95% investment lend or a 90% investment lend.
Well, that's only 65% as well.
Yeah.
Cool. Adjust that.
Yeah, so we definitely will. So if you could just expand on that afterward, it'd be good to know. Cool. So if we were going to the ANZ, the software wouldn't let us say that we're refinancing to the ANZ, so it's kind of smart and tries to push you in the right direction. Awesome. So what we're going to do is we're going to add in a bit of information about the servicing structure for that new 1.875 mil worth of lending. So we're going to say 1.5 million is going to be in the name of the look-through company, and it's going to be interest only. So as we know with the BNZ, they change their pricing based on how much is interest only, how much is P&I, whether it's investment lending. So we want to give them that information up front. So it's automatically calculating our servicing repayments. So we can throw those in. And then it's telling me we need to assign another 375,000 of lending. We'll say that's in that personal land, and it'll be P&I over the same amount of time. So this is not the final loan structure. It's just giving the banks an idea of what they should expect so that they can price things accurately. And you can see down here that we have a good monthly surplus for the client, about 4.5 grand. But what we really want to do is we want to double check what that looks like in the BNZ calculator to make sure that it's accurate. So the work that we do with the bank's calculators is quite fiddly and it can be quite difficult. So the calculators don't always fill out 100% correctly. So it's always important that you double check them. And if there are any issues, you just need to give us a call and let us know. Cool. So we've got the BNZ calculator that's downloaded. Awesome. So we've got a calculator for Hannah Mason. They have 2 dependents, which is true. So we have the first salary of 120K, which came through correctly, and then we also have the second salary that got converted to a gross amount so that the calculator can handle it. Their rental incomes have come through, and then we have the 2 different loans. And you can see we've got those expenses, and hopefully okay, so you can see we've got a within criteria, so awesome, sweet, so we're good to go. Now we might actually say, hey look, BNZ is not the right place for this, let's try Westpac. So the software will just update all of the information, and we can check the Westpac servicing calculator as well.
So you're constantly adjusting the worksheets to fit with your system?
Yeah, exactly. So whenever they get,
Constantly.
so usually what happens is an advisor will email us and say, hey, something's been updated, can you please update the spreadsheet? And then we just get it done straight away. So we have kind of everything in the spreadsheet here. Hopefully if I can move down, so you can see we've got an acceptable, so 4,000 monthly surplus. It's pretty close to what the software's telling us. The software's telling us 4.5. So this is kind of, in my mind, I double checked it and I think it's good. So we're going to go ahead and submit this to the Westpac. So my funding details page is now complete, and I'm going to write in the notes about the client. So this is all pretty straightforward stuff. So you're just putting in the purpose, background and character, all the stuff that you probably are already doing. And then next up, what will happen is there'll be a list of documents that have come through if the client has uploaded the documents. So firstly, you can view those in two different places. You can view them here where they're going to be put into an actual application, and you can view them up in your Documents tab. So from here, the advisor can also upload documents from their end or from their own computer and can manage the required documents that you want from your client. So from here, what you can do is you can basically click through and you can tick a couple more documents if you wanted further ones or if the software hadn't quite got it right. And then you can request the documents from a client. And what it'll do is automatically pull up an email that'll go straight out to them with those documents. If you wanted to, you could write a couple more thoughts and send that off to the client directly. Cool, so we'll just proceed without any documents in this application.
So you're saying that sent item would only stay within this and it wouldn't go to Outlook at the moment?
Yes, so it's more important in the future actually for us to be able to bring Outlook into here. So the stuff that you're communicating with your client, we want it to extract into the data for compliance purposes. So from here, once we've ticked all of these boxes, we're ready to go and we can actually download an application to submit to the bank. If one of our assistants goes in and they change any of this information, it'll untick the boxes so you'll know that something's been changed. So, you know, often clients, they'll send you half the stuff and you won't hear from them for 2 weeks and then you'll get the rest. It's really good to be able to know what has and hasn't been checked. Cool, we'll get a quick overview of the application and then throw it all together. So at the moment what happens is this downloads a zip file with the bank servicing calculator and a PDF application form that you will email through to the bank. So as soon as they're ready, we'll be putting the data straight through to them. At the moment they're not. Cool, so we have the servicing calculator that we looked through, and we also have the application form. So this is probably going to be a little bit difficult for you guys to see. So it's produced by Chuck with his branding, and we have a summary of the application type. Then we have the diary notes that we've produced. And we have the security that's on offer as part of the application. We have a breakdown of the funding that's required, including what the likely new loan structure is going to be. And then we also have the properties that are on offer as security. Then we have all of the applicant's information. So for Hannah and for Ryan. And then we have things that are specific to the households. Then what we do is we show their income and expenses and what their likely new finance expense is going to be with the Westpac, so the bank can calculate a surplus. And then we have assets and liabilities, which include the existing credit card and mortgages that are being refinanced. Awesome, and then the software also tells the bank, hey, look, these are the documents we've included, and these are the ones that we haven't. And if there were documents as part of this application, they would just be in the bottom of this PDF, all merged together in one file. So from here, you're going to do a bit of work with the client and the bank. You might want to add some activities and kind of track what you're doing. So we might want to say, hey, look, let's follow up with Westpac in a couple of days. How about next Monday? Hopefully by then they have been able to pick up the application and take a look at it. So could make a note and set myself an activity for next week.
Can you assign those to others?
Yes. So if we take another look at this activity, you'll see that it's actually set up to be assigned. So it gets assigned to a person, and it also gets assigned to a specific opportunity within a client's file. So you could have multiple applications going with different banks that you need to manage separately, or you could have, you could have just more than one thing going on at once. So it's important that you get that level of clarity. And it's also really important from a compliance point of view, moving into kind of a much more regulated environment where you want to be able to say, hey, these are the exact things that we did for each of these opportunities. But the software makes it really easy as well by trying to auto-select things. If there's only one application, it's always going to pre-select that opportunity. Cool, so if we wanted to, we can call them up and say, hey, that's done. As soon as that gets done, we'll be asked to submit or kind of put in our next follow-up activity. So we might want to then follow up with the client and book in a time for us to meet to review maybe a pre-approval if we've received one. So what we're going to do is we're going to move the client from the fact-find completed stage through to having submitted an application through to the Westpac. So we can do that here. And then we can go ahead and we can take a look at our pipeline and see how that client has moved through to application submitted on the pipeline. So as you start to fill up this with client data, it will become really useful for letting you know, hey, how much am I likely to close over the next couple of months? And where should I be spending my time? Do I need to work more on prospecting, or have I got a bit of a backlog with the banks? So we also use a traffic light system to let you know whether or not, so each one of these things represents an open application. And so you can see whether or not there's an activity scheduled to be able to follow up with that client. Cool, so we'll keep going with that same application for Hannah Mason and assume that we've received a pre-approval for the full amount with the Westpac, which is great. So what we're going to want to do now is we're actually going to want to, hey, put together a bit of a review for the client and decide on a loan structure. So we can go through and back into the application. So let's say that they have they found an actual address for this property. So we go. And then what we can do is we can start preparing a review page. So this can either be accessed by the client through their online portal when you turn it on, or you can arrange a meeting with them, bring your iPad or bring your laptop and sit there and go through this with them. So you can load a template. So we might want to try out our investor template. And what it will do is it will pull in a number of different sections of information that you can preset with the client. So this can pull in a number of different calculators or uploadable and downloadable documents. And what it does is it eventually builds a page, if you give me a second, that looks, I'll just quickly go through and fill out the information that we require. So here we've got like a congratulations page, and we want to put in some interest rates that we've been able to negotiate. So we're going to say, hey, look, we want to display offered rates versus other rates. So we'll do, maybe you could do Westpac's special rates versus their carded rates, or you could do Westpac's rates versus the ANZ's rates. And we have requested a floating rate, flexible rate, 1 year, 2 year, and a 3 year rate. So it's automatically pulling through ANZ's rates for us here to throw in. And then we might want to put in the rates we've got from Westpac. So let's say, cool. So next up, we're going to need to upload the pre-approval document for the client. So I will not upload anything there because I'm on my computer. And then the next thing that we want to do is put in a rough outline of what the future loan structure might look like for the client to give us a starting point. So I think we applied for 1875. maybe they got a $10,000 cash incentive. And then we're going to add in the loan structure. Is that a bit rich?
Why doesn't that pull that through from that first?
The reason is because we might not have, so let's say that 900K was unaffordable, it just might not be the actual amount that they've come back to us with a pre-approval for. It probably could though, to be honest.
And then you could adjust it.
Yeah, exactly, yeah, so another good one. Cool, so the first, that's good. Cool, so the first one that we're going to say is, hey, maybe they're going to have 800,000 interest only, period of, let's say, 5 years, and it's going to be they're going to fix that for 1 year, and we want the documented term for that to be 30 years. We're going to make fortnightly repayments on that loan, and the borrower is going to be the LTC, and there might be specific notes on that one as well. We'll go ahead and set that up. So we will start with just the one loan and then go and take a look at it on the other side. So, cool. So what we can do from here is we can go ahead and view this page. And this builds a page that can be sent to the client, or as I said, you can take your laptop. So first we have a comparison of the rates that we've been able to negotiate. And then if there was a pre-approval here, you'd be able to download it and also kind of add in the main points that you want to cover with the clients about their pre-approval. Then you can choose from like a number of our default different sets of information, or you can create your own, so that you can say, hey, look, this is a financial concept that I need to work through with you.
This guy's a link to the client?
Yes.
Oh, they just click on the link?
Yep, so you can, so you make it available to them through that portal, and then you send them an email to log into that portal. So it's all through the software. So you know what I would do here is I would say, hey, let's activate the page, and then email a link to the client, and then it says, hey, your recommended loan structure is ready. Let's take a look at this. Yeah. And so each of these sections is kind of like customizable, so you can move them around if the order's wrong and save new templates, which is really cool. So from here, a number of these calculators, you can decide how you want to use them. You know, you can do a comparison, so you can say, hey, let's say if we increased our monthly repayments by $250 on that loan, you know, how much are you going to save over the life of the loan?
Do you have a full information calculator?
Yes. What do you mean by?
Oh, like it's got each repayment.
Yeah, so that's kind of it at the bottom.
Right.
Yeah, so, but you can put it to the top if you wanted to.
Yeah.
So I've just set up the full Monty, lots of different information here to run through with the client. But what I want to show you as well is I've actually put some information about a referrer that I work with. So this is Nick, who's one of the best lawyers in town, and I really want you to work with him. So what I can do here is I can say, hey, look, just click that button and I'll connect you with Nick. And boom, what will happen is an email will be sent to you with all of the client's details that you can just forward on to Nick and say, hey, Nick, just take a look at this. I want you to work with this person. And in the future, what will actually happen is the client will be able to send him all of the information that you have on the client to be able to close his business that he needs to. So it's going to become really, really powerful.
What type of information will go to the lawyer?
So that would effectively. So at the moment, what it would be is contact details that first get sent to you and then move on to the lawyer. So you have to forward them on, so you can double check it. But eventually, what we want to do is we want to build out a system that kind of, you've got all the information, you just make it really nice and easy for the other people that you work with.
And there's a record of them saying, yes, I want to be connected to them, just to kind of privacy.
So we launched this feature yesterday, and no, there isn't. So that's another really good one. So, but this actually doesn't send anything directly to the lawyer. It first sends it to you in this instance, and then you make the decision as to whether or not you want to share it. Just so that, as a kind of like a minimum viable product, we can start testing it with our clients. Cool. So we get down to the bottom, and you're going to want to start working on that loan structure with the client. So we can say, hey, look, how much of that lending do you want to draw down? And then we're going to say, look, we want the full amount, because everyone always says that. Yeah, no, cool. Okay. Awesome. So we've still got to allocate $1 million worth of loans. So the client might say, look, I want to do another 500K on a 3-year fixed rate. So
Take away out 18 months because the BNC don't do 18 months.
yeah, well, it's actually, it's not letting you use the 18 months because we didn't upload that interest rate. So we said that we'd only received 1 2 and a 3-year rate for the client. Cool, and we'll say that that's a fortnightly loan, probably monthly. Cool, and so we've got 575 left. So what we'll do is make this one of their primary residence. So principal and interest. So what we can do as well is we can set the documented term to 30 years on this loan, but we can override that with a shorter repayment term for the fixed period. So if you want to, there is a lot of flexibility in the way that you can use this. So let's do that. Let's set it to 20 years so that they can pay off the loan a bit faster. And if you wanted, you can also set specific notes about this account. If it was a revolving credit or a flexible account and you wanted them to have credit cards or something, you can throw all of that in here straight away while you're getting the information so you don't forget it. Cool, so we just need to add in payment frequency, now borrowers. Awesome. Okay, and once the client's ready to go, they can click confirm loan structure. And the software will automatically ask them everything that they need to know. So let's say that the settlement date is going to be, let's just do it today, 6th of the 12th, 2017. If they want to choose a repayment date, they can. They can add in their solicitor's details. It's not yet pulling through details from Nick. And they can also select who they want to be contacted. So we'll get Hannah as the key contact and say that they want to go to the Botany Westpac branch. Are they insured? Make sure that you remind them to change their insurer. And then they can double check the loan information for those 3 loans. And they can go ahead and they can sign this off on your iPad or on their computer. And if you want, you can also send acknowledgement of this to the client's email address straight away. And then you can confirm it. So currently, this loan structure confirmation page isn't accepted by all of the banks, but it does give you a really good point for compliance purposes to say, hey, look, we actually went through it all. This is exactly what was decided on. And you have everything there, so you can pass it on to an admin person, or you can copy it across. And hopefully, through time, the banks will become much more open to receiving things like this that actually work.
You have loan confirmation signed by client, but then earlier I didn't see any, unless I missed the
Yes, so you're right.
Application, they need to sign the form.
Yeah.
So that we can disclose it.
Yeah, so as part of the onboarding process for advisors, we will get your terms of service, your disclosure, and also your declaration, and we automatically upload them. So once they're
what
uploaded,
I mean is the client got to sign.
Yes, so when we got to the documents section of the client portal, one of the required documents is a declaration, and they can download your declaration from the client portal, sign it, and then re-upload it when they're uploading all their other documents.
So what about
the actual application?
the application, the last page normally, the client got to sign to give us the authority to
disclose the information.
So that is the declaration that we get them to download. It's the same. I think it's the same thing.
No, different.
Okay.
Yeah.
Personal disclosure, our disclosure is different from their
okay.
giving us.
So what I would suggest you do in that case is you can always send them a copy of the downloaded application for them to sign. Yeah, yeah. So we can talk about it afterwards and just make sure that I understand. Yeah. Cool. So what's happened is Hannah Mason has confirmed the loan structure, which is awesome, and gone ahead and settled the loans. So we're just moving her through the pipeline as we're managing her. and then we get to the point where we receive commission, which is really good. So what we're going to do here is we're going to say, hey, look, we've gone ahead and we've actually won this activity, this opportunity for a client. We've been able to successfully help them. And what the software is going to do is it's going to start updating all of the information in the background to make sure that we're keeping really accurate data about our clients on file. So it's picked up that there's a new property now at 15 Buckens Beach Road which has been purchased. It also knows that we need to ditch the old ANZ loans and we need to create 3 new Westpac loans. We had that credit card that we know that the client has repaid and closed. And then we're also going to just say, hey, when did this lending draw down? So it drew down today. And we received our commission today as well, so we received 10,000, let's say, in commission, and we received that today. So we can go ahead and win that opportunity. Woohoo. And the client disappears from our pipeline. And when we go back and take a look at their file now, what you'll see is that they now have 3 new loan products with the settlement dates of the fixed loans automatically set for your fixed rate rollovers. So here we have the 800K which comes off on the 6th of December in 2018. And the power of this is, hasn't all been built out yet, but effectively what we want to do is help you guys manage the fixed rate rollover process. So in the future, those fixed rate rollover dates will automatically trigger our emails to them and ask them to double check that their information is still the same. And if it isn't, you'll then be alerted with their activity so that you can give them a call and you can work on helping them review their mortgage.
You mean emails go here to the client?
Yes.
From branded you?
They would actually probably have your brand on them.
Oh, that's what I mean, branded.
Yeah, for sure. So at the moment, this is one of the features that we haven't had the time or focus to be able to build out in full. But I can just show you, at the moment what it does is 80 days out, it sets you an activity to email them. So that's all it does. But in the future what it'll do is we'll give you the flexibility to be able to set how you want the follow-up to happen based on your business.
Where's the calendar that gives you all these alerts?
So there isn't one at the moment. So
okay.
Yeah, if that's something that's important, yeah, let's talk about it. But what will happen is they will currently, so in your pipelines, you have a mortgage pipeline which manages all of your upfront new business that's coming in. You also have your settlement, your servicing pipeline. And your servicing pipeline is what we haven't yet put much time into, but this is where an opportunity to service a client's mortgage will come up to when it's 80 days out from their refix date.
So the front end will bring it through.
Yes.
When you put in the
So
original
this will all talk and it'll make sure that the right client's details are in there, it's referencing the right loan, it all kind of does that. It's just about the actual communication that is yet to be built out. Yeah, so that's most of what we built today. We have a lot of really exciting stuff that we're going to be building out next year, and it would be great to get some feedback. So if you guys thought, hey, this hasn't done what I want software to do for me, speak to me. Come and have a chat because I'd love to hear from you guys. Was there any questions?
What's the cost?
Yeah.
Yeah. So the current advisors are paying $300 a month per user, and I'm hoping that we'll be able to do something special for Kepa next year. As I said, at the moment we're not taking anyone else on board.
Cool. What about merging existing bases over?
Yeah. So I mean, you can ask Rupert. Do you want to talk about?
Yeah. So I changed businesses in March, and I pulled my data out of the CRM we were using and back into the same software. So this was before Trail existed, and the data was a mess. This is going to the same software, just a different company name. It was a mess, and I was quite nervous when Chuck took my data and put it into Trail, and it turned out almost cleaner data because of the scripts that you wrote. So my experience wasn't very good to merge over.
You can never get things 100%. It's impossible. But the thing is that we don't. This is why we don't put it on you guys to do it, because we know how important it is to get it set up correctly from day one. And that's part of kind of like the whole reason why we're running the business in the way that we are, is we want to be able to provide really good levels of support and really good levels of training so that you actually see the benefit of the software. So it would literally be sitting down and understanding what it is that you're currently using and where you're currently storing your data and what kind of format we can get it out. And then I pass it over to the developers and they start the engine up and they are very good at sorting it out.
So what it means that, Rupert, you're using it now, have you sent it directly to the bank or?
Just exactly as we show. So the clients do their details, then we have a look at it, and then we download a PDF and Excel.
What's the
then
feedback from the
you
banks?
send it to the bank?
Yep.
Oh, okay.
What's the feedback from the banks? Are they saying they love it?
They certainly complain about it, yeah.
What bank?
Just
Is
the
it all
same.
bank or?
All the banks are yeah, I mean, banks are never that happy. But I think once everyone's using it, it'll be so uniform that they'll know when they get one of the trail applications, they'll know exactly where it is, yeah. For me, I think, because I went from e-PDFs and then you build the documents that they send you, the bank statements and stuff. To me, I think I've probably tripled the amount of applications I could do without admin assistance. Because they haven't uploaded their passports, you just send them an email that says upload passports.
Could you just click on passport and say, please?
Yeah.
Okay.
So just takes
Can this read PDF forms?
No, it can't. What were you thinking that it would be good to do that for?
Mine's all in OneDrive at the moment. I'll be waiting for the right CRM to be here.
Yeah, cool.
And
So it would be quite easy for us to take everything that's in OneDrive and get the documents into the system for the right clients.
Yes.
So
can you do it for us?
yes. So like if you're coming on board, we know it's going to be a long-term relationship. We will invest up front to make it work. Yeah. We'll at least give it a really good go.
What is this file format saved under? What's the format?
So the format of the end application, PDF. Yeah.
Just go by so I show the get started button, just to get an idea.
Oh yeah, sure. So this is Rupert's website.
Send the banks down.
So let's just go. So you've got the get started button. So from here, a client can click through and, sorry, it's just a bit messed up on this, but they can effectively go through and then they're straight into Mortgage Lab's version of the software. Sadly, I don't have a mortgage for you though, so it's no good.
I haven't had any clients push back on it and say it was too hard or anything.
Yeah, I mean the clients can, they can even, if they really wanted to, they can do it from their phones. They can open it up and they can go through it. We've had people do the whole application on mobile devices. So it does just provide them with like an extra level of flexibility. Yeah. Cool. Anything else?
You bring your risk in.
Sorry? Yeah, I mean we're definitely we definitely do see that as being a very big next step. So with the way that we're building the software is we've tried to build a really stable foundation that we can plug other types of financial products into. Eventually, the long-term goal is that you can have a network with your referrers, and you can effectively get access to the information that you need from the people that you work with. It takes a while to get there, but I think that's what will make everyone's businesses much more valuable.
Time frame on the risk side?
I would say it totally depends how much function you're expecting. In terms of an actual CRM, probably February. Take a bit longer to get the full application built. So
it needs analysis to...
Yeah, so more specifically understanding how to get the information into all of the insurers' forms. It's quite challenging, but we are working on it. So if it's something that interests you, I can definitely I can run you through it and give you kind of some early access to take a look at. Yeah.
Just what you're already building.
Yeah. Yeah. Cool. Awesome.
So this is obviously stored in cloud. So can we also do a backup copy on our external drive?
Yeah, so you can download all of the customer data and everything, but the software is hosted on something called Microsoft Azure, and it's one of the largest hosting platforms in the world. eBay runs off it, so it's very secure and very safe. and it's very unlikely that the software is going to lose your data. It's just almost possible because we have multiple backups online anyway. But you can download all of your data. Yeah. Great.